Hello. Let me tell you, at this age and maturity, I am sucked enough to not fall for such cheap tricks. Okay? Ha. Ha. All right, ladies and gentlemen, boys and girls, deviyo sajjano, mitro. एक second, please hold on. Boys and girls, deviyo sajjano, mitro. We have reached that stage of our life where we are done with. Bolna, what are we done with? You can say whatever you want to. We are done with the chapter capital gain. We will finish the balance questions that we have on capital gain. We have finished till question number 100. Okay, fantastic. We go to question number 101, page number 133. Huh. Who was the one who was forcing to switch off that light? You will read. Loudly, huh? Your voice should enter my mic.
Mr. F sold a residential house which was purchased by him in 1997 for 1 lakh. The fair market value of the house on 1st April 2001 was 1,50,000. The house is sold by him on 16th August 2024 for 60 lakh rupees. The due date of furnishing return is 31st July 2025. Compute capital gains if we invest rupees 10 lakh for the purchase of new house on 14th May 2025 and another rupees 6 lakh for purchase of the second house on 10th June 2028.
So what is that extra concept now which is coming in this question answer solving? The amount of exemptions where you have made investment in new asset, you are eligible for exemption. That is the new concept that is going to enter here. Yes or no? But the calculation of gain part is not going to change. So now to start with the net sale consideration of rupees 60 lakh, is it? Then what is your cost of acquisition? Mitro, minus kawa or I kawa? Long term, not in exception. After the cost of acquisition, actual cost was 1 lakh. Fair market value on, so whichever is, we will take deduction of 1,50,000. We will get our long term capital gain 58 lakh. Correct? Is there any cost of improvement? No. So 58 lakh 50,000. But against this long term capital gain, now see, we know that this tax benefit is available only and only if you make investment. So our common sense does tell us that this is a deduction, this is not an exemption. But in the law they have written the word exemption. So on the answer paper we will also use the word exemption. Exemption under section 54. Whenever your capital gain is up to rupees 2 crore, at least once in a lifetime are you able to take the benefit of 2 houses. So he has made 2 houses and is the capital investment in 2 houses. Is the capital gain up to 2 crore? Yes. So 14th May 2025 and 10 June 28. What are the investment amounts in the respective houses? 10 lakh rupees. So first house ka how much exemption we will get? 10 lakh. Once in a lifetime, if gain is up to 2 crore, are we eligible for 2 houses ka exemption? Yes. And therefore second house ka how much exemption we will get? Popat! Studying direct tax is like getting married. Every time you think you are right, you are wrong. She will find out some mistake. She who? I see. Second house disqualified because purchase has to be within 2 years. And this is purchase, so you can't say 3 years. Construct, then we will say 3 years. Now don't nod your head. There. Question number 102, please.
He sold a residential house which was purchased by him in 1996 for rupees 60,000. The fair market value of the house on 1st April 2001 was 1,60,000. The house is sold by him on 16th July 2024 for rupees 50 lakhs. The due date of furnishing the return is 31st July 2025. Compute capital gains in the following independent cases. He invests rupees 3 lakh for purchase of new house on 14th May 2024. He also paid registration fee of the house of and brokerage rupees 50,000 each. We invest rupees 3,10,000 in capital in account scheme. On 30th June 2025, he purchases a house property of rupees 2,50,000. On 1st August 2025, no further investment is made by him. He purchases new house for rupees 2,50,000 on 20th July 2025. The new house is sold by him for rupees 7 lakhs on 10th July 2026.
So once again, typically what is happening in this paragraph, your capital gain is arising. Once that capital gain has arisen, you are making investment. As far as computation of gain is concerned, we have solved so many questions that this much part you will have to solve on your own. But of course, the three investments are independent cases. So it is like three different questions. We will solve them one at a time. But do you realize still the capital gain part will remain same? So the net sale consideration is rupees 50 lakh minus long term, not in exception. Before, every time you don't have to say after, then what's the point of analysis? Before. You check कर calendar पे 16 July comes before 23rd or before. No? Kawa or I kawa? I kawa. And for I kawa also, first you will need kawa. What is your kawa? Actual of 60 or 160? 60 or 160? 160. This 1,60,000 will be indexed. Yes or no? Divide by 100. Multiply by 363. Correct hai? This time I will need your ICAI. 5,80,800. Giving you sug of 44 lakh 19,200. And now what has he done? He has made the following investments. Case A. He has invested in a residential house. House ka cost is 3 lakh, but total investment, I hope you understand, is 4 lakh. Why? Because investment has to be all inclusive. There is stamp duty, registration charges paid by you. So whatever are the additional charges that will add to your cost. No, we know the definition of cost. So what is your cost of acquisition? 4 lakh. Investment amount is 4 lakh. Investment amount is 4 lakh. 3 lakh plus 50,000 plus 50,000 each. No. So what is your investment in new asset? But there is a problem. This was already done. The sale took place after this. But purchase is allowed even if done 1 year before. So case 1, purchase 1 year before. Yes or no? And therefore, will you get exemption? Under section 54, what is the investment that you have made? 4 lakh. Sir, 3 plus 0.5 plus 0.5, that is 4 lakh, or your capital gain. What is your capital gain? 44 lakh 19,200, whichever is lower. Do you understand? Therefore, what is your exemption in the first case? What is your exemption in the first case? 4 lakh rupees. Correct hai? Second. He invests 3,10,000 in capital gain deposit account scheme and purchases a new house property with that money on 1st August. Is investment in capital gain deposit account scheme allowed for the purpose of claiming your exemption? Yes. That means, can I say this time under section 54, what is going to be your exemption? The investment that you have made, 3,10,000, or the capital gain of 44 lakh 19, whichever is lower. Can you take this exemption? 9 Q. So when do you have to make it? After what?
6 months after.
30th June is next year ka 30th June. What is wrong with you people? Classroom change has affected you badly or what? Investment I am asking, so you are saying 3 lakh when it is clearly 4 lakh. The investment was made in the assessment year before the due date of return. Pagal hai kya? Property sold on 16 July 24 and investment is made on 30th June 25. 3,10,000. This is not pagal hai. This is not NHAI. This is not 54 EC. This is investment under section 54. which has to be done within 2 years or 3 years. But in the meantime, where will we keep our money? Capital gain deposit account scheme. So have we put money in capital gain deposit account scheme? So are we going to be eligible for this investment? Yes, because this is lower than the capital gain amount. So what is finally our answer? This. But this comes with a duty now. Yeah, yes. What is the duty? Use the money to acquire the asset. Utilized amount is how much? So what is the unutilized balance? So do you realize this unutilized 60,000 will become taxable capital gain in the year of expiry of time limit? Do you understand that? This is going to be taxable in the year of expiry of time limit. It won't be taxable immediately. When the time limit expires, at that time it is going to be taxable. Later, no. See, right now there is still scope of you making investment, no. But once that time limit expires, we know that the unutilized balance has to be taxable. Now clear? Now no confusion. देखो, most of the sections have given only one time limit for investment. Only 54 and 54F have given two time limits. For purchase 2 years and for construct 3 years. Supposingly 2 years ka time limit gets over. It appears that you have not purchased. But the point is that within the next 1 year, is it possible to construct a house? My simple question is, can you construct a house in 1 year? So at the end of 2 years, we cannot consider you as a defaulter. Because we assume that in 1 year, you may probably construct and make your investment. But at the end of 3 years time limit, you have definitely not purchased or constructed. Then you are disqualified. So only in these two sections, 54 and 54F, we wait for the third year to get over before treating you defaulter. In all other sections, there is only one time limit. And once that time limit is over, you are a defaulter. देखो, can he, is the capital gain up to 2 crore? So he has purchased one house. So can he construct another house within 3 years? He can purchase within 2 years or construct within 3 years. In our eyes, you are going to become a defaulter only after expiry of 3 years. Understood? No, but then the taxability comes only after expiry of the time. So the balance will remain in the capital gain deposit account scheme. We will trigger your taxation. Year of taxation will be year of expiry of time. Very good question, but understood the answer. Okay, chalo next. He purchases new house on this date. So what is his capital gain? 44 lakh 19. What is his investment? So that means what is going to be his exemption under section 54? Whichever is lower, 2 lakh 50. But then what did he do thereafter? The new house is sold by him for rupees 7 lakh during the lock-in period. Is that violation of lock-in period? So what do we do? I am giving an option. Chalo, let's cancel this exemption. No, this exemption won't be cancelled. At the time of sale of new house, when we compute capital gain of the new house, in that we will adjust the exemption that you have taken. So the exemption taken is not going to be affected. The future sale will include the capital gain of the new asset and the reversal of the old asset. Now clear? So Mitro, what is sale consideration? 7 lakh. What was the cost at which we acquired it? However, because of that, we took tax benefit of, resulting in our cost being 0 and full amount being taxable capital. Understood now, everyone? Fantastic. Huh? Google Maps. Copy किधर है? T. रेगुलरली कभी हो कीर्ति कीर्ति आप अभी मर गए नहीं, there is one more secret. He as per his planning, So one fine day when he will become a parent, he will open a cricket team with extras, with IPL squad, with he plans like a budget every year one side. हाँ.
That is what he's thinking. What about the opposite party?
बोला tax benefit for more and more children. So
सुपर वो मिलते हैं घर वालों को मतलब अभी के प्रेसिडेंट
हाँ. Question number 103. One.
Correct purchase agricultural land in Kolkata for rupees 6 lakhs in 2006-7. The agricultural land was sold on 25th February 2025 for rupees 1 crore 80 lakhs. The amount is invested as under. On 28th March 2025, agricultural land in a village for 75 lakhs. 29th March 2025, bonds of NHAI 48 lakhs. 4th April 2025, bond of RECL 47 lakhs.
Agricultural land, it can be urban area or rural area. Supposingly the land is in rural area, what if I tell you that we don't have to calculate only anything? What will be our answer? Not a capital asset. But then this area, urban or rural? Huh? Huh. Don't answer this from my POV. See, I have told you before, I have personal issues. Okay? So for me, it may probably be rural area. Bro, it is in India, that's a big deal. It's a matter of time. It is West. India में तो it is East. So why do we call it West Bengal? India के map में Calcutta is on the east. And why is it called West Bengal? Because Bangladesh में it is on the western side. The very few Indians you will get over there. You 99% chance is that the person whom you are talking to is actually an illegal Bangladeshi immigrant. हाँ, नाम चेंज नहीं, they have Aadhaar card, they have everything, है ना? तो for now it is Indian urban land based on population factors. We will have to calculate net sale consideration 1 crore 80 lakh minus कौवा और आई कौवा, कौवा नहीं आई कौवा, long term eligible and after no. So cost of acquisition, what was cost of this agricultural land? 6 lakh. This gives you your Lutsug of 1 crore 74 lakh. Now do you understand, this assessee has made multiple investment, and throughout the chapter nowhere did I tell you that one capital gain is not eligible for multiple section ka exemption as long as it is invested in the allowed mode. For example, if I sell agricultural land and I invest in another agricultural land, I am eligible for exemption under section 54B. So I have invested in a village. Allowed? Yes. Even if it is rural, it is allowed 75 lakh. And then section 54 EC says sell any long-term immovable property. Is this long-term? Immovable property, long-term immovable property. So 54 EC is also going to be allowed. Do you understand? Yes or no? So I have purchased bonds of NHI also. I have purchased bonds of RECL also. Investment in NHI is 48 lakh and 47. Effectively, the total 54 EC will become rupees 90, restricted to a maximum of 50 lakh, giving you total of 1 crore 25 lakh as your exemption for the purpose of your long-term capital gain taxability. Understood? Chal 104.
Arjun furnishes the following particulars and requests your advice as to the ability of the capital gains. Residential house purchased by him on 10th March 2008 for rupees 1,05,000 was sold by him for a consideration of rupees 15 lakhs on 2nd November 2024. He incurred expenses at the time of purchase rupees 2,000, at the time of sale for brokerage rupees 2,000. He invested rupees 70,000 in bonds with National Highway Authority of India out of self-contribution. He also invested rupees 2 lakh in capital gain account for purchase of new house on 1st July 2025. Rupees 1,80,000 on 1st September 2025 unit of return was 31st July 2025. On this fact, compute the capital gain chargeable to tax, whether Arjun would be entitled to any exemption.
You must be, at that stage of your life. You know how she does every time I am discussing something. She's like, "Bak, I will solve." है ना? Actually, you should reach that tendency. Okay, the moment you start reading, you start understanding. No? You should start trying solving on your own. For example, I think this time there is brokerage. So we will have to start our answer with gross sale consideration. What was the price at which Arjun? Oh, Modi ji's favorite figure. 15 lakh minus transfer expense. Which one? Purchase wala or sale wala? Sale brokerage is how much? 4,000. So we subtract 4,000 to get your net sale consideration of 14 lakh 96,000. Step number 2. Kaua or I Kaua? Kaua. Sir, why? Sale on 2nd November. So now we know it will be Kaua. It is the after date, but do you realize it is still long term and eligible asset? Okay. What was cost of acquisition of your asset in 7 8 105? So will we take deduction of 105 here? No. 105 plus 2,000, that is 1 lakh 7,000, giving you long term capital gain of 13 lakh 89,000. Now with this, what have you done? You've made one investment in bonds of NHAI. Are you going to be eligible? Yes. Long term immovable. Long term immovable. So yes, 54 EC NHAI bonds, 70,000 rupees. And second, you also made investment in capital gain deposit account scheme. See, when you invest in capital gain deposit account scheme, what can be the intention? First, observe karo, what is the asset sold by him? Is it a residential house? So sale of residential house comes under section 54, and 54 does qualify you for CGDAS. So can we take the exemption under section 54 for the time being, at least to the extent of contribution in CGDAS, with the condition that that amount has to be utilized to acquire the asset within the section time limit. So for now, how much have we contributed? We have contributed 2 lakh, and then we have also contributed 1 lakh 80,000. Correct or no? 2 lakh we have contributed on 1st July, and then we have contributed on 1st of September rupees. Nahi sir, very good sir. Why? Because after due date of return filing, you are disqualified. Investment in CGDAS has to be made before the due date. So we are eligible only for 2 lakh here. 2 lakh 70,000 effectively will become your exemption amount. Correct hai? Chalo, 105. Vimla. Next question. 105. Vimla. Mr. नहीं, Miss Vimla.
Miss Vimla sold a residential building at Jodhpur for rupees 18 lakh. Stamp duty value of rupees 25 lakhs. On 1st August 2024, the building was acquired for rupees 1,50,000. On 1st July 2010, she paid brokerage at 2% at the time of sale of building. She invested rupees 2 lakhs in purchase of land and incurred rupees 5 lakhs for construction of residential in December 2024. And brokerage and stamp duty of rupees 50,000 each. Deposited 2 lakhs in NHAI capital gain bonds in March 2025.
Compute the taxable capital gain. Is there brokerage on sale given to us? Yes. So we will start our answer with gross sale consideration. What do you think, or what are you thinking about gross sale consideration? The property sold for 18 lakhs. So gross sale consideration will be rupees. Gross sale consideration will be rupees 18 lakh. सब मारेगा ना पकड़ के. हाँ, GSC only. What will be GSC? Why 25? It is always stamp duty value, correct or no? So what is it? Always purchase price.
GSC, NS, where NSC direct here.
What answer will you take, whether GSC or NSC? Always you will take stamp duty value only. So what will you take always? What is the rule?
NSC.
What will you take in GSC? NSC.
अगर 2000 एक से दिया है तो स्टैम्प ड्यूटी वैल्यू हो जाएगी
I am asking sale consideration, not cost of acquisition. Rubbish baat mat karo. Go and open the book. Otherwise, you will see stars in daylight. Actual sale consideration of 18 lakh and stamp duty value of what is sale consideration? Actual or stamp duty value, whichever is. Final answer? Wrong answer. As difference is greater than 10% of actual, so we are taking stamp duty value as our answer. Minus Kawa or I Kawa? She sold on 1st of transfer expense. Kitna? 2%. 2% of 25 lakh rupees. Why 18 lakh? GSC is 25 lakh, then why 18 lakh? Because we don't pay broker on stamp duty value. We will pay broker on actual. Correct or no? Very good. Net sale consideration 24 lakh 64,000 minus Kawa. What was the cost at which the asset was acquired? 1,50,000. At that time, was there any brokerage? No. So 1,50,000 becomes your Kawa, giving you long-term capital gain of 23 lakh 14,000. Now this money has been used for making investment. She has invested in land and constructed building. That means she is doing construction. I'll tell you what, when you construct, no, so you will make investment in land and you will incur expense in construction. All that will be considered as your investment. Everything that you are investing will be considered as your investment in new asset, and that total investment has to be made within. Why not 2 years this time? Because it's a case of construction. And bro, 3 years is done in 3 months. Is done in December. So under section 54, what was cost of land? 5 lakh plus construction cost 2 lakh plus the other expenses 0.5 is it? So giving you total of 8 lakh rupees. Will that become your exemption under section 54? Yes or no? And plus she has also 54 EC NHI bonds. What is the monetary limit for 54 EC? 50 lakh. And what is the investment she has made? 2 lakh. Is 2 lakh within the limit of 50 lakh? Yes or no? And therefore the exemption that she will get in respect of this is rupees? No. No. क्या हुआ? क्या रहा है? कुछ हो रहा है? When you sell your property on 1st August, NHA RECL investment has to be made within 6 months. The 1st September, October, November, December, Jan, 1st Feb is the expiry of 6 months. And you have made investment in month of March. Even if it is 1st of March, no, it is beyond the time limit allowed. You are not going to get straightforward questions. Welcome to Chartered Accountancy. Stop comparing it with your BCom final year ka tax paper. No. Stop comparing it. Some have to not given, still they are comparing. This is CA intermediate, bro. They will never ask you direct questions. What do you expect here? They will say March 25. In the bracket, they will write. So this is beyond 6 months and therefore there will be no 54 EC exemption. Don't give. Close the bracket. Compute capital. Huh? Nahin na? Haan, so ladies and gentlemen, understood the mistake you made? That was the only possible mistake in this question, but you made that also. Chalo, theek hai. Next try karo. 106. Hey, chal, time pass. Chal.
Jewelry purchased for rupees 10 lakh on 1st August 2000, sold for rupees 61 lakhs and brokerage on sale of rupees 1 lakh on 1st February 2025. Purchased a residential house for rupees 40 lakhs on 1st May 2025.
So first of all, my question is, sir, this is sale of jewelry. Where is the question of any exemption? Which exemption are you talking about? Any asset sold and purchase of residential house. I appreciate, but still, capital gain, you will have to learn section number. Last section, section 54F. Sell anything, but invest in residential house. Correct hai? हाँ, तो gross sale consideration 61 lakh minus transfer expense 1 lakh. Net sale consideration 60 lakh minus kawa or I kawa long term eligible, but after the amendment, and therefore kawa. What was kawa? 10 lakh. Giving you latsag of rupees 50 lakh. And what is the investment that you have made in residential house? 40 lakh. So from 50 lakh we will subtract 40 lakh. Yes or no? No! Because what is that one difference in 54F compared to the rest of the chapter? That here you are not going to directly subtract your investment amount. If you want to make 50 zero, you have to buy off 60. If 60 lakh is invested, then 50 lakh will become zero. In every other section, you have to invest the gain amount. Here you have to invest the sale amount. So have we invested 60 lakh? No. So will full 50 be exempt? No. So what will be exempt? Proportionate. For exemption under section 54F, we will take proportionate exemption 50 lakh into 40 by 60. 4 by 6, 2 by 3, all are same. 33 lakh, 33,333. You understood? This is what separates 54F from the rest of the chapter. 107.
Suppose in question 106, on the date of sale of jewelry, the assessee already owns 2 houses. Just that.
Will he get exemption in that case? See, their target was to not allow any house. Please pay attention. But they allowed as per law 1 house, thinking that it will be your village house. Correct? So actually, as per law, you should be having maximum 1 house on the date of sale. You can have 2 houses if that second house is that one which you have purchased for the exemption. But that exemption ka house to you purchase later only, no? That is so clearly given. That exemption wala house is that 40 lakh wala house. That means if you are already having 2 houses on the date of, then there will be no exemption that you will get. There will be no exemption that you will be getting. Correct hai? Chalo, 108.
Mr. A sold shares of private limited company for rupees 8 lakhs on 1st October 2024, which had been acquired by him in October 2007 for rupees 50,000. He wants to utilize the said amount of sale consideration for sale of the shares that on 1st October 2024 he has deposited 4 lakhs under the capital gain deposit account scheme with the specified bank on 30th April 2025. As such, the capital gain taxable in his hand and advise him as to what further action has to take to avail the exemption.
See, one thing is calculate the taxable capital gain. That we will do like we have been doing. This question also will give you an opportunity to think like a chartered accountant. Give your expert advice. Well, this is your gain, but plus I give you the following suggestions as a better tax planning strategy. The role of a chartered accountant is to plan the taxes so well that the assessee has the bare minimum liability without any cheating or evasion. That is called planning, where you can utilize benefits given in the section. The first step is computation. See, we have sold shares. So in sale of shares, is there any exemption of 54 series? Sale of shares, where is the exemption? Is there any section? I want you to first identify, is there any section? Any LTCA? And invest where? Residential house. So which section gets attracted? 54F. See, EC can't be attracted. For EC, you have to sell immovable property. And in EC, capital gain deposit account scheme also is not there. Direct investment in bonds has to be there. Here, first of all, you've sold shares. and secondly you made investment in CG Das. So now sale of shares and investment in CG Das, which will later be utilized, 54 can't apply, 54B can't apply, D can't apply, EC can't apply. You have only one option, 54F. Correct hai? Okay. So what is your net sale consideration here? 8 lakh rupees. This is again going to be a case of Kaua survive after, therefore still long term capital gain 7,50,000. And what is the investment that I have made in CGDS? 4 lakh. Will I subtract 4 lakh from the capital gain here? Will I subtract 4 lakh? 30th April is before the due date of return filing. No. So I'll subtract 4 lakh. एक minute, I am not asking any question. You tell me, what do I do now? What proportion? That is what I am asking you to explain. No, please. What do we have to do now is what I am asking you. Simple question. 54F ka exemption we will give. This is where I asked you that investment is 4 lakh. Shall I subtract 4 lakh? Because we do capital gain or investment, whichever is lower, no? So will I subtract 4 lakh? No, because in this section, what did you learn in the last question then? What do you do in this section 54F? Proportionate. Proportion of what? Investment upon net sale consideration. That means, can I say I have invested only half of my NSC? Therefore, I will get exemption only of half, and the balance of 375 is going to be taxable. Do you understand? First of all, you have to be clear. 54F gives you proportionate exemption on NSC, not the investment that will be directly supported. Now you have to give your expert advice. There are 2-3 tips that I want to give you. If you want to contribute first, then most welcome, because these things, make us feel that, okay, we are also learning something, not just solving questions. You are to getting stuck in solving also. But I am giving you the benefit of doubt. Maybe you did not understand what I was asking. I was asking simple. Do I subtract 4 lakh here? They are not answering only. Do I subtract 4 lakh? Why I don't subtract 4 lakh? Because in all other sections, do I subtract the investment amount? But in 54F, I don't subtract investment amount. I take investment upon NSC ka proportion. ठीक है? I understand that you probably did not understand my question. Now give your advice at least. Give your advice. 2-3 points I will give. If out of that, if you can give something, so great. Invest what? Invest in NHI RECL. So what will you get? What will you get? 54. B. EC. Wrong answer. Because for that, the asset that is sold has to be immovable property. So NHI RECL investment ka advice is wrong advice. Sorry. Invest in residential. How that? So I have invested in CGDAS. The same amount I am going to use only. Set the purpose of. So basically, you are saying this, no? That the money that you put here, invest a CGDS funds in residential house within the time limit of section 54F, which can be purchased within 2 years, construct within 3 years. Then only this exemption that you have taken right now will be sustained. Otherwise, later it will become taxable. The unutilized balance. Correct or no? That is one thing that you have to be careful. Just taking the subtraction right now is not enough, because you've actually not invested in the real asset. You only invested in the deposit scheme. So deposit scheme money has to be utilized. Without that utilization, your cycle is not complete. So you have to tell the assessee, please make sure you do that. Any other advice? So same thing we have written. Chalo. If unutilized within the time limit, then the balance will be taxable, but only the proportionate amount will be taxable. Supposingly full 4 lakh is unutilized, so I will pay tax only on 375 because I took exemption only in that proportion. Anything else? utilize, excellent, additional 4 lakh, or you can say invest additional 4 lakh within the time limit. In that case, you may get what you are getting as part exemption. Your part exemption will become. This is the advice, and this is the kind of advice that you are expected to give as a chartered accountant. That when you have invested only 4 lakh out of 8 lakh, you are getting exemption of only 375 out of 750. But if you would have by chance invested full 8 lakh, full net sale consideration, then you would have got exemption also of full amount, full 750. Understood or no? Hello. So these are the points that you have to keep in mind so that you are able to get your exemption effectively and correctly. Whenever a question is asking you to take tax advice, further action to be taken, as a good CA, you will have to give such suggestions. I do agree that at intermediate level, you will very rarely get to see questions on this. Most questions on this come at CA final, where you have to structure the transactions. And they also believe that during your articleship, you have learned how structuring of transaction works. If you push yourself to this much limit, you may probably be able to get that much more tax benefit. At least as an advice you should give. Then whether to do it or not to do it, let your client take the final call. As an advice, at least you should give. Supposingly client says, "No, sir, I want to make only this much investment. Let the exemption be limited. I will pay tax." That's your choice. But my job is to give you the suggestion. My job is to make the best books for you. No, solving and revising is your choice. See, you have to do your duty, whether the other party is doing its duty, his or her duty or no. Just because you don't do your duty does not mean that I will reduce my duty. You understand? So as a chartered accountant, we have to always stick to our duty. Is that clear? Chalo. Next. वैसे I believe most questions that I wanted to solve with you are over only. But ठीक है, 109. Solved questions, but a couple of them I will discuss with you. 109, page number 136.
Against the holder of 1,000 debenture of Omen Limited, having a face value of rupees 1,000 each, the company has offered an option to the debenture holder either to redeem the debentures of rupees 1,200 each or to convert the debentures into equity shares of equivalent value. The fair market value of the shares on the date of exercising the option is rupees 1,200 per share. Face value rupees 1,000. What will be the tax consequences of two options in the hands of debenture holder?
देखो, we have discussed about convertible debentures, conversion of debentures into equity shares. But first, what have you purchased? 1,000 debentures, and at a purchase price of 1,000 rupees. When the time for conversion came, you are given an option by the company. Option 1, you take redemption. You take redemption, matlab take your money. And how much company will give you? 1,200. If you accept the redemption offer, it is capital gain at that time. Conversion cannot be taxable transfer because you are not getting anything. But accepting redemption, basically redemption price is your selling price. So what will be your sale consideration? 1,200. What is cost of acquisition? 1,000. So capital gain 200 into 1,000. 2 lakh rupees will become your capital gain. Correct or no? But in case you accept the offer of conversion of debenture into equity shares, so at that time there will be no capital gain. Guess karo, when will capital gain arise? Sale of debentures, sale of ultimate sale of equity shares, selling price of shares minus this cost price of debenture will become your capital gain. Understood? So you have been given tax treatment of both options. Chalo. अरे bro, चल ना. 110 वाला question is on what page?
141.
A second. No? It is taking its own privileged time. Something is wrong with this. Someone did black magic on this tab today? नया है? Tab नया है. Tab is not new. Huh? 149 you said, no? 141 you said. Okay. Question 110.
State the rate of tax in the following cases as it has to be paid in cases which are listed.
That means what is going to be the rate of tax on your long-term capital gain or short-term? I'll quickly revise for you. Short-term, stock market or non-stock market. Only stock market is special rate, everything else will go in normal rate. But long-term, stock market or outside stock market, both special rate. 112 or 112. Correct or not? Second, also please note that when we say stock market, all listed things do not form a part of stock market. Only equity shares and units of equity oriented mutual fund are a part of stock market. Debentures, preference shares, etc., non-equity oriented mutual fund units, all of them, even if they are listed, even if you pay STT, they are not eligible for 111A, 112A. 111A ka benefit will come only in cases of equity shares and units of equity oriented mutual fund. Yes, please. One by one.
Equity shares of private limited company.
Come on, please. What is going to be the tax rate? First, tell me for short term capital gain. That is easy. 20% normal rate. Two answers you are giving. Give one answer. 15%. Why? Because they are equity shares. You are not asking me question. You have to answer the question. Answer the question. I'll give you one more chance. Short term is the easy part. Give me the answer of short term. What did I discuss with you before doing the question? Short term can be stock market or non-stock market. Long term can be stock market or non-stock market. There are 4 types of capital gains. You have to choose short term non-stock market rate, short term stock market rate, long term non-stock market rate, or long term non-stock market or stock market. I am right now discussing short term only. So there are only 2 options, stock market or non-stock market. तो क्या पागल के जैसे you are saying 15% and 20%, which is that 15 and 20, which case is it applicable? Only if the capital gain is stock market or non-stock market. Where is that applicable? Stock market, 111, and this is what? Stock market, no? A private company, or do I have to make you understand this, that private company cannot be listed? If probably you don't know that, then there is trouble. You know private company will be listed or unlisted? Then this is stock market or non-stock market? That means this will go in normal rate of tax. And what about the long-term capital gain? Don't tell me the rate. Just tell me stock market or non-stock market. Non-stock market. But mark this statement. In long-term capital gain, even normal rate is a special rate. That will go under section 112. If it was stock market, I would have written 112A. See, this question has not given us date of transaction. And in your exam here, 112 also has 2 answers, 20% and 20% and 12.5%. Correct or no? So instead of giving the rate, because rate can be applied only if you know 22 July or 23 July. You have to do what? Just tell me which is the applicable section. I'll give you now in all the cases 4 options. Normal, 111A, 112 or 112. Will that be easy for you? Chalo, let's do it. Equity shares of public. So first one will be 112 because non-stock market, and second 111. Why? Because long term is non-stock market, but short term has magically become stock market. What is 111? So what is 111? There is no section, only 111. Who taught you 111? कौन सा सेक्शन है 111? अरे पागल वागल हो क्या? एक मिनट. In long term we have 112 and 112A. In short term it is 111A or normal. Special rate का there are only 3 sections. All of you have written 111 somewhere. एक मिनट सस्ते वाले नशे. वेट एक मिनट नहीं आई डोंट वांट टू टेक एनी रिस्क विथ यू पीपल भाई. ये क्या है? What is this? There are only 3 sections of a special rate on capital gain, because short term other, there is no special section, and thus it goes in. So you assume this to be 111 because this is 112. You assumed it to be 111, is it? जहर का बोतल है, इसको लाके दो अभी का अभी, दोनों को लाके दो, जहर का बोतल अभी का भी लाके दो, फिनाइल लाके दो, चलेगा, फिनाइल है चलेगा, सनी वाला लाना, वो अच्छा, स्मेल भी अच्छा है उसका, हाँ सनी फिनाइल स्मेल्स गुड. Have you lost your brain? What are you trying to say? Normal. Next. Hey Bhagwan, I will have to take the poison, I believe. Equity shares of listed companies sold in private placement. This is slightly tricky. Don't make a mistake. This is equity share. This is listed. But we have not sold it on stock market. STT can get attracted only and only if we sell on stock market. If we sell a share in private placement, it does happen. Bulk deals. Supposedly, I told you Adani wants to sell its stake in Wilmar. So they are not selling on stock market. They are doing a private deal with a Singapore-based entity. When that private deal will take place without stock market, then the main factor of triggering 111A, 112, that is STT, won't come on. And when STT is not applicable, please remember, for stock market to get attracted, 2 assets STT, 2 assets STT. And if it is private placement, there is no STT, is my explanation. Answer you only will have to give. Long-term capital gain. 1-1. Why not 112A? Because STT is not paid. And short term? 111 nahi na? Nahi, just confirming. Next.
Equity shares of listed companies sold to recognized stock exchange.
Equity shares and sold through stock exchange means STT was paid. Now 112A and 11A nahi, 111A. 11A. 11A hota hai. 111A. Next, preference shares and debentures. Assume STT is paid. Paid. Always short term. If I am saying STT is paid means they have to be listed, no? They are listed. Always short term ka deeming fiction has come for unlisted bonds and debentures. 112. Sir, even if STT is paid, you are giving this answer? Sir, why? Because debentures and bonds are not covered on the stock market sections. See, they may be listed. You may have paid STT, but 2 assets only are covered here. And therefore, 112 nahi, abhi short term. Short term will again go in normal. Correct? Next.
Mutual fund, equity oriented fund.
Equity oriented mutual fund. Assuming STT is paid. 112A because this is the second asset, and here 111A. Fantastic.
Mutual fund,
Debt oriented mutual fund. This will go in normal. Short term at least. Here there is no confusion. Short term will go in normal. As far as long term is concerned, your answer currently 112, I give you the benefit of that answer, but also remember, if by chance it is specified fund, then it is not applicable only because specified fund is deemed to be short term. Ye correct hai? Hey Bhagwan, if you want to do some real justice to yourself and the capital gain chapter, now there are roughly 10 to 12 questions. See, PGBP ka questions are very big questions. One question in itself has to carry at least 10, 12, 14 marks because you have to do lots and lots of address. Capital gain is a particular transaction that you have done and you have to report only that particular transaction. So you need questions ka practice of at least 10 plus. And between today and tomorrow it is homework. Honestly, tell me how many students practice questions after 110? Because I did tell you that yesterday I told you that the remaining questions you will have to do till 110 I will be doing. How many practice? 4-5 questions also you have practiced, so your today's workload has reduced. And those who did not solve a single question, I am not complaining right now, but tomorrow if you have not solved all the questions before coming, so phenyl ka bottle I will pour that on your face and in your mouth and tell you. No, I will not let you sit only in class. I am very, very clear. You can't be taking chances with PGBP and capital gain. And also I must tell you one more thing. This is going to be bad news in a big form for most people. Today you will be starting capital gain questions in additional question bank also, which is possible only if you have completed questions till PGBP. And there are people who haven't started salary as yet. Salary complete, PGBP started, but not yet complete. PGBP complete anyone? Near completion, only 4-5 single digit questions left. Last 10-12 questions. That is still lagging. But then what do I say? Still better than somebody who has not done anything in PGBP. Somewhere deep down there is some person in the class thinking, मेरा तो ROR और NOR also बाकी है, तो क्या ही बोलूं. Somewhere deep down, hiding the face, not even reacting. The number of students who are near completion of PGBP questions, who will very soon, because today nahi to tomorrow, at least being a weekend, you will be able to at least start capital gains. Capital gains ka question you have to complete till the time we do IFOS clubbing set of deductions. 4 chapters ka time to complete capital gains, because capital gain questions are big. But these chapters are very small. IFOS clubbing setup will get over, you not even know. But one more thing is there, that next week, first couple of days, first 3 days, in fact, there will be no class. At least my class for Monday, Wednesday, Tuesday. When I told you I was not in town, I was supposed to finish your batch by 8th of February. I have actually committed my dates somewhere, but because of your FM and law syllabus, I had a big gap, and I have therefore trying to adjust in such a way that I at least fast finish. But the 3 days I am not there, I am not there. Okay. So you will get that slight extended time to also complete the backlog which is remaining as far as your questions are concerned. Monday, Tuesday, Wednesday, 3 days I am not there. Okay. Now, once we finish till deductions, by that time also if capital gain is over, no problem. And once we enter after deductions, we go to tax rates. By that time, in that one chapter, while I am doing tax rates for clubbing set of deductions, the questions are very small. You will be able to complete those 3 chapters while we are still doing tax rates. Like this only you can be at par with me. And one more time I would like to say, the total number of students who are near completion of PGBP upon total number of students of the classroom, that percentage of students is ICAI pass percentage also, you can verify. You understand? We say that most people fail in C, but some people pass. What is that pass percentage? Compare that with numerator mein number of students who are near completion of PGBP, which will very well start capital gain now. Divide by total number of classroom students. Take this percentage. Take ICAI pass percentage. See the comparison. Please see the comparison. Our additional question bank, open challenge to any person in the country who can even claim that they have better question answer content. I'm not even talking about the classroom teaching or that part. If you are present at 80% syllabus completion, if you are still attending class, that means there has to be some quality in the coaching. Otherwise, this generation kids, first lecture they are not comfortable, second lecture they don't come only. They clearly go home and tell the parents, teachers, everyone, nahi jam raha, not comfortable. They stop coming on the second day itself. You are still present in class, so let's not talk about the teaching part. I am only talking about the content of question answers. We do not want a case where, believe me, students of other coaching classes, other faculties, whoever competes with me on that Pan India basis, whoever has paid fees at other places, later on, from their friend ka context, at least buy the books. They don't want to buy the full video lectures because they don't want to unnecessarily spend money, but they still buy the books. Everyone is buying these books. Now, what will be a situation when someone who has purchased the books and practiced the full book actually clears, and someone who has been taught for 170 hours does not clear because of lack of question answer practice? That will be the biggest regret for me as well, because you should be at least scoring more marks than those who are buying only the books. End of the day, they are also paying me something. See, think about it. But point is that I am spending so many hours and so many days with you on a daily basis. So the expectation from you is slightly higher. And plus, believe me, in a lot of times, I stand in front of a room filled with idiots, even in CA final. I don't put any effort in trying to motivate them also, because I know that no matter how much time or energy I spend, there is no caliber. Let's leave it. The problem is only when the people with caliber are not doing justice to their caliber, and there is a particular image of you people that I have in my mind. I cannot forget the day where after 20 days ka gap, I resumed your classes, and into my disbelief, absolute disbelief, I don't expect it from intermediate students at all. They actually remembered my ROR, NOR and NR explanation done 20 days earlier. I was absolutely shocked and pleasantly surprised. I had zero expectation. I thought I will have to start fresh. So you created that image by putting your effort. What happened now? What is wrong with you that yesterday's section 54F you don't remember today? Why that gap in your own performance? What is happening with you is one of the biggest problems that happens with CA students as and when they move closer to their exams. Their performance level, which should go up, actually falls down. How can you people who I don't get impressed easily at this age, no matter how much I don't fall for those cheap tricks. I have got that age and maturity. You'll have to put more efforts, bro. I get impressed with discipline, sincerity, dedication towards your job, because this is what is going to give you everything in life. And you did impress me. 10th January, I remember the date. But what is wrong with you now? You guys can't be like that. You guys can't be like that. By the way, at least the foundation kids, let me remind you that you cleared the worst foundation exam ever. I know most are graduates, but I want to remind you that June 2024 was the worst foundation exam ever, 15%. And what will be that situation where despite being in that 15%, I am not clear? And May 25 pass percentage has to be good, because only the good have come. 100 were there, out of which 85 were filtered at the beginning itself. So in that 15%, most people are with that caliber. You may probably see 50% also, but then provided you write, no. Ultimately, even if the pass percentage is 50 at intermediate, never seen before. May 24 was 30 highest ever. But with only caliber people coming in intermediate, the pass percentage may probably go further. Even if it goes beyond 50, there are still 50 who have not cleared. Who are they? Who are those 50 who are not clearing even in 50% passing? What is the difference between you and them? Caliber? No. Efforts, discipline, injustice to your own talent. Only because you guys are you guys, I am having this discussion. Let me remind you, I don't get paid for motivating anyone. I get paid only for completing your direct tax syllabus. That is also too less. But I want the best results out of you, with the hope that with the best results, I also get paid more in future. And you have the talent of increasing my remuneration. You do have that talent. You don't disappoint, please. Don't disappoint yourself. Don't disappoint your family. Don't disappoint anyone. Because remember, lifetime tag of first attempt at all the levels is a different tag altogether. Different tag. There is no match to that. Don't react by saying, sir, मेरा तो foundation ही 2 बार में हुआ था अभी what? नहीं. But then foundation में तो there is no rank also. Inter final तो gives you opportunity of rank also. No. You can go for it. Okay. Capital gain was probably your last chance to come back to that zone, because now the chapters in any case are going to be very, very easy. Ladies and gentlemen, we are done with 80% of your syllabus and make sure, देखो, additional question bank, I request class questions if you don't do. Focal bamboo, phenyl bottle, everything is available. Everything is available. And in this building, this is the new building where you have started attending from today. We have some cats and dogs also outside the building, in the building lobby. Then see, I'll bring them and leave them on you. Bola ja. Choo. Huh. And I know Chino Chiku Chibu is thinking that, sir, I to play with pets daily, but they are not pets. So please make sure you solve these questions. I am going to check your notebook tomorrow. Don't say, sir, I read the question and the answer I have understood. No, I want the answers in solution in writing in your book, and tomorrow's lecture only. The homework is not for Saturday or Monday or Tuesday. Tomorrow is Saturday. The homework is for tomorrow. I am very clear on that. Okay, Mitro. This brings us to the fifth and the last head of income. Charging section 56. Income from other sources. IFOS, that is income from other sources. IFOS, income from other sources. Income tax is payable by every person in each assessment year on what? On the net taxable total income. When, by the way, syllabus was over, two things were left. We started NTTI. NTTI may we first discuss things that will not be included, exempt income. Then we started learning inclusions. We have completed salary, house property, PGBP, capital gain, 4 heads of income. Last head of income, salary or PGBP are the most popular of all. India requires house property separately, considering the gap between rich and poor, and capital gain will record your abnormal profits. But then my question is, in these 4 heads are all the possible incomes that you can earn in life over? In the 4 heads, nine. There are so many incomes which are not covered anywhere. And after a point, income tax law is like, sir, how many heads we will make? We'll get sick and tired making head after head after head. So income tax law is basically doing what we all used to do in school. List states list states of India: Andhra Pradesh, Bihar, Telangana, Maharashtra, Gujarat, Odisha. End of thinking capacity. End of thinking capacity. ETC. This chapter is ETC. This chapter is ETC. There is a very, very offensive way also of explaining this. Very offensive. It, may probably hurt the sentiments of a few, and therefore there is a big question that should that example be given or not be given? Should it be taken in class or not? It is offensive, I do agree. So should it be spoken in class? Yes. Are you sure? Then don't make faces that, sir, you should not be talking like that. At least it is not a manner befitting a professional. Then don't say that. The blame is on you. I was anyways going to say it only, but because you all said yes, so the responsibility will be yours. Income tax law has basically opened an orphanage. No one keeps you, we will keep you, is this chapter. We will keep you if no one keeps you. What is this chapter? Supposingly you have earned income. Obviously there has to be income. No, there is Income Tax Act. So there has to be income. And this income is not exempt. Not exempt means taxable. And this income is not covered under section 15. 15 is salary. 22, 28 and 45. So this income will be considered as IFOS. Nobody is keeping you. Listen, the first 4 heads are not keeping you. Bro, exempt income is also not keeping you. If exempt income would have kept you, then no need to pay tax. Exempt income is not keeping you. The first 4 heads are not keeping you. When no one keeps you, we will keep you. We will take care of you. That is IFOS. For example, think about it. Bank interest. Have we learned any exemption on bank interest? No. So bank interest is taxable. Is it salary? House property? Your bank interest can't be said, this is my business. Keep money with bank and earn interest. Business requires daily involvement. And it is not transfer of capital asset. So where will it go? if you receive say interest on income tax refund, think about it. Principal is not taxable. Please understand the logic. I have discussed this in PGBP also. When I pay income tax, I don't get deduction. So when I will get refund, I won't pay tax. But if I get interest on that refund, that is extra income, I will pay tax. But where? It is not salary, house, property, PGBP or capital gain. Where will it be covered? Income from other sources. Income from other sources might be covered. Supposingly you have made agriculture income outside India. Agriculture income is exempt only and only if in India. Outside India will be taxable. But then outside India can't be your daily business because you are a resident. Why resident? Why not non-resident? Because non-resident outside India cannot be taxable. So it has to be resident, so that global income, other sources. Supposingly you have an income called subletting. You have given on rent an asset that you have taken on rent. Taken on rent, given on rent. Yes or no? Is it taxable? Yes, because not exempt. Is it salary? No. House property? House property rent? No, because owner and not PGBP. Capital gain, so it will come here. So what is IFOS? Not covered anywhere else will come here. Is IFOS. Do you realize that actually for IFOS you don't have to learn IFOS, you have to run the other chapters. Anything that has not gone in the other chapters, anything that has not gone in the last 5 chapters, exempt income, salary, house property, PGBP, capital gains, anything that has not gone in the last 5 chapters will come here. That we already know. So what are you going to teach us? In this chapter, they have given under section 56 subsection 2, they have given a list of incomes which will be always considered as IFOS. Normally, an income will come under IFOS if it is not taxable anywhere else. These incomes will come under IFOS without checking anything else. They will directly be, mandatorily be discussed, covered and considered under income from other sources. Without checking, is this salary, house property? No, don't check. Directly bring it under IFOS. We have to majorly discuss about these other incomes for which we don't check anything. There are 2 ways of bringing an income under IFOS. 1, not covered anywhere else. 2, direct IFOS. So we are learning the list of direct IFOS. That is what the only thing we have to learn. Is that clear? So what is that list? First, any gift that you receive, but of course excluding the gift received from your employer, logically. Sir, why? If the employer gives us gift, it won't be covered under IFOS. Employer ka gift will be covered under salary. So one thing is for sure, that the gift that is going to be covered here is going to be non-employer, other than employer. It has to be always IFOS. Gift will be taxable under IFOS. And I have told you this, gift is 50% of the chapter. We will finish everything in the chapter, then we will start gift. Whatever time is taken for the rest of the chapter is the equal time taken for learning gift. Think about it. If the gift is from other than employer, it can't be salary. It is not house property. It can't be business. You can't say, sir, what is my business? I take gift from people and don't give it back. I have made the business of taking gift from people. Must have an idea. But that is not a business. Obviously, it is not capital gain. Thus, specifically taxable under IFOS. Certain incomes you don't have to check anything, directly bring them under IFOS. Is that clear? Next. Acha, gift ke andar there is one more clarification I want to give you, though I have already discussed this in the chapter scope of total income. If a resident is giving gift to anyone who is non-resident or even RNOR, and the gift is also given outside India. See, if the gift is given in India, then it is Indian income. But the gift was given outside India, it is still going to be deemed to be Indian income. We have studied this, but it is only working as a summary for me right now. Okay? Chalo, second. Any kind of dividend from company or mutual fund that you get, any kind of interest on securities, etc. that you earn, this is all going to be taxable under income from other sources. Dividend from company you will get if you buy shares. From mutual fund, if you will get, you'll get if you'll buy units. And from interest from securities you'll get if you buy bonds and debentures. They will always, dividend income will always be classified under income from other sources. Dividend income will always be classified under income from other sources. Now, do I need to explain that resident के लिए it will be world income, Indian company dividend or foreign company, and non-resident only Indian dividend? That requires no explanation. Correct or no? But dividend will always come under IFOS. This I must still clarify, even if you are a dealer in securities. This I must clarify. Dividend will be taxable under IFOS even if you are a dealer in securities. Sir, if I am a dealer in securities, I am doing buying and selling of securities. So it looks like dividend is earned from my stock in trade. Let's put it under PGBP. No. The profit on sale of securities is my PGBP. Dividend comes while holding the security. It will be considered as side income. In case you have any confusion, we make it clear. Your business is buying and selling of securities. Then profit from buying and selling is PGBP. Dividend will still come under IFOS. Dividend will come under IFOS. Always. Always IFOS. Are we clear on this? Dividend will always come under income from other sources. And I am not wasting time in writing resident world dividend, non-resident Indian dividend. That much is clear, because I have to go to a bigger and more complicated issue here. Dividend income will also include something called deemed dividend. There are two ways in which the corporate sector grants dividend to shareholders. One, they make loud announcement, "Hey, bacho, dividend, 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 dividend." Interim dividend, final dividend announced in the AGM. That's one way of granting. But sometimes the company will call its shareholder. Dividend, dividend, dividend. Without making loud announcements, secretly give dividend is called deemed dividend, which is covered under section 222. So section 2 clause 22, A, B, C, D, E, and plus an amendment, a new clause 222 F also. A, B, C, D, E, and a new clause 222 F also, out of which only one we have studied, 222 C. B and D never come in exam, so without wasting too much of time, we will still do that. E does come, E we will spend proper time, and F is an amendment. So totally there are 6 types of deemed dividend. We will learn the 6 types of deemed dividend one by one. Okay? First and third, they are absolutely same. Even while doing 222C, I did tell you that any student who has studied 222C has by default understood 222A also. 222A and C are absolutely same as far as the deemed dividend calculation is concerned. But the question is, how much do you remember from 222C? When does 222C take place? Whenever a company goes under liquidation. So what is happening in both these cases? There is a company that is transferring assets to its shareholders. The difference is, in 222C, the company is undergoing liquidation and therefore it has got no choice but to give the assets. But in 222A, the company is a going concern. So there is no immediate plan of going into liquidation, but we are still giving our assets. No. If we give our shareholder monetary benefit, is it dividend? If we give our shareholder non-monetary benefit, it is still dividend. Any distribution from a company to its shareholder, whether monetary or non-monetary, it is going to be considered dividend. So during the day-to-day life of a company, if there are profits, the company wants to give dividend to its shareholders, but the company does not have cash. So what is the company doing? Some assets which it does not need, it is handing over to the shareholder in the form of secret dividend without liquidity. Now the point is that from the receiver point of view, if I am getting money, that is dividend, or if I am getting asset, that is dividend. Money part to very easy, requires no explanation. As a shareholder, whatever dividend you receive, it is going to be taxable. When you receive asset, company is liquidating or not liquidating is not your problem. Company is liquidating, still you are getting asset. Not liquidating, still you are getting asset. The dividend part remains the same. Only difference is when the company is liquidating, then the asset is coming against your investment in shares. Shares will become useless. So we also have capital gain on shares. So the value of the asset will be divided in two parts. To the extent of reserves will go in IFOS and balance will become selling price of your shares. FMV minus deemed dividend. But in the going concern part, my shares will remain as it is intact. Why? Because the company is not going under liquidation. That means the full asset I am getting only in the form of dividend. You understand? So the dividend part remains same. What is the company giving? Whatever company gives, that is receipt of shareholder. The fair market value of the asset for the shareholder is going to be deemed dividend. What is going to be the dividend for the shareholder? The fair market value of the asset. However, the maximum deemed dividend will be equal to free reserve, because company law does not allow more than that, and the free reserves will include capitalized profits. Capitalized profits matlab we will include bonus. Is this exactly what we wrote in 222C? 222A, as far as the dividend part is absolutely same. What is the different or the extra part in 222A? It is going concern. So there won't be any capital gain. In 222C, there will be this calculation plus capital gain. So capital gain part we have completed. Now we have to do only the dividend part. And dividend part in both clauses, same. There is no change in the dividend part. The change is only in the capital gain part. Is that understood? Mitro, is that understood? Fantastic. Next, 222B. As I already told you that it never comes, so we won't waste too much of time. 222B has got two subparts. One, if you have given any kind of bonus shares to preference shareholders, or two, if you have given any kind of bonus debentures to equity or preference shareholders. Bonus shares to preference shareholders or bonus debentures to equity or preference shareholders will be deemed dividend. Which means at least one thing that you should know. See, you have to understand what is written and you have to also understand what is not written. So do you realize, which makes it clear that if you give bonus shares to equity shareholder, that can't be considered as, because observe the points that are written. No, for equity shareholders only free debentures are being given, but for preference shareholder anything given free is given. Whose explanation you want first, equity or preference? Don't say both. First I ask. First you want preference. Think about it. Why are preference shareholders called preferentials? You all know equity, preference, etc. Otherwise I won't do anything to you. Preference shareholders get fixed dividend and first payment at the time of liquidation. After paying their fixed dividend, if there is extra profit left, they are not eligible for a single rupee. Everything belongs to the equity shareholders. Voting power also we don't. We just give them preference in the form of dividend payments. Correct hai? Correct hai? Then why are we giving them free stuff? Whether shares or debentures. You observe preference shareholders are common in both. Why are we giving them? Does anyone give anything free of cost to anyone? QR code do. Does anyone, I repeat my question, does anyone give anything to anyone free? No. No. You will always take something in return. So if I'll tell you, a preference shareholder, tell me what is your dividend expectation, whatever we have promised. Tell me how much fixed dividend we should give you. 12% is the rate. So based on your investment, give me an amount in rupees. Give me an amount in rupees, any amount, annual, 1 lakh. Your shares are going to be redeemed after 5 years. Redemption date is coming. So in 5 years, your total expectation becomes 5 lakh. Based on your example, annual expectation 1 lakh. 5 years, 5 lakh. Take this free shares of 5 lakh. Now don't come and ask for them. 5 years later, when we will do redemption, you will get this 5 against your shares. Right now, don't ask for money. We don't have cash. That means a preference shareholder will accept this free share or free debenture on the understanding that I will now not take my dividend. We are secretly passing our benefit to preference shareholder. If you would have received in cash, it would have been a dividend income taxable. You are receiving in kind, whether free share or free debenture, it is still going to be taxable. Is that clear? Why preference shareholders everything is taxable? Now let's talk about equity shareholders. Please understand, when an equity shareholder is given free shares, why it is not deemed dividend? Why? What are free shares? Reserves and surplus ko we are moving to share capital. Are we giving you any cash right now? No. Even if we are moving this amount in share capital, do you have a redemption date? No. You will get this money from share capital also only at the time of. So bro, whether it remains in reserves or goes in share capital, reserves ka amount also you will get at the time of liquidation. If capitalized, then capital ka amount also you will get at the time of liquidation. So free shares given to you will not bring any value addition because that money any which way belongs to you. So therefore free shares of equity shareholders can't be dividend because it is not changing their life. But free debentures will change their life. Think about it. We will give you free debentures right now, on the understanding that now you don't come and demand any dividend annually, which in any case is not fixed, but still they demand. No? Don't demand. Take these free debentures. And one fine day we will redeem the debentures. So in return you will get cash. Debentures will come with a redemption date. So you know when you are going to get that cash. But bonus shares to equity shareholders won't come with a redemption date. That comes only at the time of liquidation. And thus for equity shareholders, only free debentures are dividend, free shares are not. Which makes us come to a conclusion that free shares or debentures, anything given to preference shareholders is an extra benefit. It will be considered as deemed as dividend income and taxable for them under IFOS. And for equity shareholders, free shares do not bring any value addition because it is, how can I give something to you free which is already yours? It is not an extra benefit. But free debentures are extra benefit. They will be redeemed before the liquidation. And therefore only free debentures will be deemed dividend. Understood? This is basically a secret way of giving them dividend. This is on the understanding that you will not ask for demand for any dividend hereafter. Understood? Understood? So A and C is distribution of asset. B is creation of a liability. Free shares or free debentures. So right now the free debenture is. Conversion is always a choice. Conversion into equity shares is not a mandatory thing. You may take redemption at that time. So right now it is a free debenture given to you. It will be deemed. Clear hai? Fantastic. C is over. Let's talk about D also very quickly so that we can focus on E, which comes in exam, and F, which is an amendment. D. This is a chapter that is in your accounts syllabus. Any distribution to shareholders at the time of a transaction called internal reconstruction. Is internal reconstruction a part of your account syllabus? Whenever a company is going through bad times, we try to revive the company within the company. Some of the stakeholders of the company agree to waive some benefits. We hear adjustments like equity shareholders have agreed to reduce paid up value from 10 rupees to 2 rupees. Preference shareholders have agreed to waive 5 years dividend. Correct? They waive something and in return we promise something. For this, we create a temporary account called capital reduction account. So all the profits and losses are routed through that account called capital reduction account, which later acts as your reserve and surplus. Okay. Capital reduction account, internal reconstruction, reduce paid up value from 10 rupees to 2 rupees. I hope you are not wondering how I know all this. CA hai bro, my CA inter mark sheet. By the way, I must tell you, out of all the subject, highest was accounts. Higher than tax. कितना था? 79. हाँ. Lowest was, वैसे don't count that 44 because IT SM का I came home after my last paper and my father asked me, will you clear CA inter? PCC था. I said if I pass this paper I will clear because I knew what I have done in the other papers and I knew what I did in this paper. We had 50 marks IT, 50 marks SM, and I know out of those 44, 34 were in SM. Because however boring SM may sound, but you can still bluff, write nonsense, increase the size of your answer like economics paper and still get marks. And in IT we had 10 marks flowchart. That's the only answer I knew. Make a flowchart and I knew I will get those 10 marks. Other than that, 0 out of 50. 44. So don't count that because I was always weak at it. But second lowest was 64. I missed a rank only by 3 marks. That also with 44 in my mark sheet. Bad luck. But क्या करें? I am living with the regret. Don't say sir तो एक बार वापस IT को दे दो ना sir. Inter exam. If you give inter exam one more time, तो you may probably get a rank this time. AIR 1. Bro, even now there is SN. Companies Act 2013 I will have to learn. Standards of auditing I will have to learn. Accounts I will manage. I don't know whether I will because so much of standards now. You all don't have most of the practical subjects, practical chapters. Majorly you all have standards. So accounts also I'm not sure. Marks if I at all I will get maybe costing FM. Of course. Direct tax is also 50. You all know more IDT than me. Are you aware of that? Believe me, you all know more IDT than me. Because my IDT knowledge is same as that Chennai ka pani puri wala. In my wildest dream also, in this life, I am not giving CA exam again. Because 15 years after becoming CA, I am not making up this statement. Believe me, I swear by anyone. I swear by my neighbor's wife, I'm telling you. Even now, I am writing an exam. That ISCA paper of CA final. I am not knowing anything. Oh my God, I don't know anything. I am sweating. I am scared. I am tense. Heartbeat fast. Hurry, it was a dream. Nightmare. I wake up. I was in the exam hall. Hey, who is this lady? Arey, to wife hai. Acha, I am a CA. Hey, I am a CA. I once reacted. Ye bachcha kaun hai? नहीं for a brief moment then I am not Akash bro, I know mine. I know I have one I know about it. But believe me, I am not making this up. Every few months I get the nightmare of writing that ISCA paper. So in this lifetime I will kill myself. I am not going to write CA exam again. You have the opportunity, ladies and gentlemen, internal reconstruction part of capital reduction. Whenever we are passing on any benefit to the shareholder, that benefit is going to be covered under 222D, because ultimately while we debit capital reduction account, but that is indirect debit to reserves only, because that only later on goes and becomes a part of your reserves and surplus. Capital reserve is, I think, what you meant, correct? Okay. 222E. This you will have to do with sincerity because it does come. So you have to focus on C, E, and F. F is an amendment. C is important because it has effect of capital gain other sources both. and E पे independent questions also come. On A there may not be questions, but if you do C, you've covered it, and B and D never come. So focus on it. E has got two parts. E ka part 1. This section is applicable only and only to a closely held company. English. Income tax law has used two terms: widely held, closely held, for public and private respectively. Public companies in income tax law are referred to as widely held, and private companies are referred to as closely held. This point 222E is applicable only to private companies. Only to private companies means this is not applicable in cases of public companies. Supposingly there is a company X Private Limited, because this is applicable only to private companies, closely held companies. This company has given a loan or an advance or a deposit to a person, Mr. A, who is a beneficial shareholder. The first thing that I will have to explain to you here is, sir, what do you mean by a beneficial share? Sir, shareholder we are aware. What is beneficial shareholder? Any person who is having 10% or more voting power. Exact 10 is also covered. Exact 10 is also covered. At exact 10, you will be considered as beneficial shareholder. 10% or more, but with relatives. 10% or more voting power along with your relatives. So, supposingly Mr. A has got 8% voting power and his wife, Mrs. A, has got 2% voting power. While yes, somewhere in the chapter I am going to teach you the definition of relative, but spouse is the most obvious case of. See, anyone else falls in the definition of relative or no? Your spouse will. Spouse. For those who don't know, in Marathi, why reins are called paus. Reins in Marathi we call paus, and spouse you are aware. So we always say this in Marathi in Mumbai. Life of a Mumbaikar is very difficult. Bahar paus, ghari spouse, and you have to tolerate both. Never heard this term before. Bahar paus, ghari spouse. No, bro, you are saying it's a bad joke because you don't have experience of one of them. Range ka you have, no? When you'll experience, no, you'll come to know that dono baraste. Both. Okay? You have to hide. When they are in their full form, you have to take shelter somewhere. Somewhere nearby, neighbor, somewhere you have to take shelter. So Mr. X 8% plus Mr. A 8% plus Mrs. A 2%. Is it making the 10% with relatives? Such people will be considered as beneficial shareholder. Do you understand? We have given loan, advance or deposit to our beneficial shareholder. That means, can I say shareholder is the receiver of this money? This is going to be considered as IFOS for the receiving shareholder, as this is your deemed dividend under section 222E, taxable for the receiving shareholder. Now listen to the statement. Statement re. Loan, advance or deposit received by a beneficial shareholder from a closely held company. I repeat, loan, advance or deposit received by a beneficial shareholder from a closely held company. Is this loan, advance or deposit received by a beneficial shareholder from a closely held company? Then this for the receiver will be taxable as deemed. Sir, we have taken loan. Yes, loan received equal to taxable income. Loan received equal to taxable income. Kya? Sir, loan? Yes, this is the law. Now we want the logic. Magic nahi. Logic is magic. The magic of logic. Is this person an owner here? And minimum is 10%. Upper side it can be 60-70%. Most private companies are actually family owned businesses. If they don't want to start a partnership firm or proprietorship, then two brothers or father son or husband wife, they open a private company. Or flat they open LLPs also, but they may open.
So here the husband should own more than उससे ज़्यादा hold करना चाहिए.
Not necessary, husband or wife. See, acha, let me clarify this also. Husband 8%, wife 2%. Is Mr. A beneficial shareholder? Yes. Is Mrs. A beneficial shareholder? Yes. क्योंकि 2 plus 8 क्या होता है चेक करके. 2 plus 8 is 10 only, no? So are we clear? 8 plus 2 or 2 plus 8. 2 plus 8 is 8. For some people, yes. 2 plus 8 is also 10. So husband and wife both are beneficial shareholders. Are we clear on this? Let's understand the logic. This company has made lots and lots of good profits. And 10% is an example. Family businesses, it can be 70-80%. We have given some private equity to outsiders. We started a family business as a limited company by husband and wife becoming 50-50% shareholders. Then we wanted some investor. So maybe we have given 5-10% equity to someone, but still we hold 90% as a family. We are the main owners of the company. Company has made nice profits, excellent profit. And the moment we see the profits, we, the shareholders, we are like, wow, profit. Why am I sounding so sensuous? No. Normal language. Profit. Wow, profit. Greedy people. Paisa. They want this money. Arey, having money is very easy. You can have this money. Why and how can you have this money? Declare a dividend. You only will get, no. But the problem in declaring dividend is, if we give you, we will have to give to every shareholder. All bhuka nanga minority shareholders also, that 10% owner will also come and ask for dividend, no? Don't you think so? If dividend is given to one shareholder, it has to be given to all the shareholders on the paid up value. I am calling them greedy because only they want the dividend. They don't want to give it to anybody else. They don't want to give the dividend to anybody else. To idea. Tada. Don't declare only dividend. Give them loan. What will be journal entry here? Loan given account debit to cash bank account, to bank account. And what will be the journal entry? Bank account debit to loan received. This loan in the company's balance sheet will come on the asset side. This loan here will come on the liability side. Has the cash transferred? While it appears like, nay, I have to pay, but then there are people who don't pay, and this is why this happens only in private companies. Public company, if you are not able to recover your loan, the shareholder will come and eat you up in your AG. A private company, shareholders, directors, they are only the shareholders. They take loan with the greed of never giving it back. 6-7 years, this will appear in the balance sheet. One fine day, they will write it off. They will write off at bad debts. They will write off as not to pay, not to be paid. They are taking loan with the intention of never giving it back. The secret way of giving dividend. And thus, ladies and gentlemen, loan advance deposit also became taxable as deemed dividend. Understood? The statement, loan advance or deposit received by a beneficial shareholder from a closely held company. Understood? Everyone? Absolutely clear? Loan advance or deposit received by a beneficial shareholder from a closely held company. Part 2 भी है.
ये taxable किसको होगा?
The recipient. The recipient. The person who took the loan is enjoying the money, no? and not giving it back. Correct? Hai? Fantastic. Now let's talk about part 2. We live in a country called India. In our country, no one wants to know what is the law. In our country, everyone wants to know, sir, if I do this, so this law will not be applicable to me. No? Everyone wants to find a way out. Bro, what all you have to do not to feed your family? What to do? Still, I am getting paid so less. Quite close, bro. You don't know the geography here. You don't know the map of. Oh, right here. Right here. No need. We call it Chorna. No assistance needed from anyone. You understand? We live in a country called India. We want to find a way out. So idea. Same company, X Private Limited. Same Mr. A, who is a beneficial shareholder. Now, with the grace of God, do you know the meaning of beneficial shareholder? Grace of God, nahi, someone else ka. Do you know the meaning of beneficial shareholder? Fantastic. If this company makes lots and lots of profits, so can the shareholders take that money by way of dividend? But the greedy shareholders don't want to give it to minorities. India is not a country for minorities. So what should I say? No? Option 2, take loan. Don't give it back. We can't do that also because it is covered in part 1. Okay, bro. Idea. This shareholder now opens a business concern. See, I am using business concern word because this business concern can be proprietorship, partnership, company, LLP, anything. And in this business concern, he is a substantial interest holder. Means in this company, he is beneficial interest holder. But in the business, he is substantial. Sir, beneficial ka percentage is how much? 10. When is a person considered as substantial interest holder? In this organization, you are having 20% or more voting power along with your relatives. When you have 10% or more voting power, beneficial. And when you have 20% or more voting power, substantial. Correct? Hai? Now listen. The funds or the profits are with the private company here. If we give dividend, so we have to give to minorities. If we give loan, so it is still becoming taxable. Idea. Give the loan, the advance or deposit in this business concern. Money will come here. Pay attention. Pay attention. Money will come here. And from here, how to take the money? That is in my control. So supposingly, this is proprietorship. So I am the proprietor. This is partnership. Then I have 20% PSR. This is company. I have 20% equity. That means from here, taking money is not going to be difficult. Instead of sending the money directly, we are sending the money indirectly from our company to our beneficial shareholder. Do you realize we are directly escaping part 1 by doing this planning? No, bro. This is also going to be considered as IFOS, that is deemed dividend under section 222A. Oh, bro, listen. For whom this time? And this time the recipient is this business concern. Whoever gets the funds has to pay tax. Case 1, it was the shareholder himself. Case 2, it is the business concern. That means in a private company, if beneficial means 10%, substantial means 20%. Beneficial is, substantial is. In a private company, if the beneficial shareholder takes loan, so it is taxable for the beneficial shareholder himself. And if a business takes loan where the beneficial shareholder is having substantial ownership, then it will be taxable for the business. If I have to speak the statement in the law, in the section 222E, the statement goes like this. See, if you are comfortable, there is one way in which the Income Tax Act is written. And there is one way in which I explain by making these arrows, these charts, these tables. See the difference. The law says loan, advance or deposit received by a beneficial shareholder or a business in which the beneficial shareholder has substantial interest from a closely held company is deemed dividend for the recipient. This one statement covers both part 1 and part 2. I repeat, loan, advance or deposit received by beneficial shareholder or a business in which beneficial shareholder is holding substantial interest from a closely held company is deemed dividend for recipient is covering both cases, part 1, part 2. Tada! अरे अंडरस्टूड क्या नहीं एवरीवन? मजा आया? एवरीवन मजा आया? That's your 222E part 1 and part 2. Part 1, part 2. Everyone is clear? Still not over. Other points to be noted. First, no one asked me this. Instead of asking, sir, 8 plus 2 is 10 and 2 plus 8 is 10. That's not your caliber. You should have asked, you know what? Sir, I am taking loan. I am Mr. A. I am taking loan. Is it my deemed dividend? Beneficial shareholder taking loan. Is it my deemed dividend? So what if I repay the loan? No. I am saying they are taking the loan with the greed of never giving it back, with the intention of never giving it back. But can they give it back? Is it possible that they give it back? Sir, then you didn't ask. Or is it possible, sir, I have taken loan, sir, but what if I am paying interest on it? Is it possible? So, ladies and gentlemen, 222E is compulsory. Even if the loan is repaid and even if interest is paid. 222E is compulsory even if the loan is repaid and even if interest is paid. You want to understand in my language, no? So let me make it clear. You take a loan in the morning and repay in the afternoon, it is still taxable. You repay or you pay interest, irrelevant. The moment you take the loan, it is deemed for the receiver. It is deemed dividend for the receiver. Is that clear? Second, maximum deemed dividend equal to the free reserves. This we have seen in the other sections as well. But after writing equal to free reserves, we wrote something more over there, including bonus. Now here they say excluding bonus. Maximum deemed dividend equal to free reserves, excluding bonus. Of course, we would want to know, sir, why. Now the thing is that if I have to tell you the logic of this, actually the logic has become outdated. 4 years ago, the taxability of dividend was a little different than what it is now. And at that time, this was logical. Now, while dividend ka tax treatment got amended, unfortunately, this is not yet amended. So, the logic is hidden in a past law. At that time, it was extremely logical. If you want, I will discuss that past law so that you know the logic. But remember that now it is slightly illogical because that is amended. This is not. 4 years ago, dividend was not taxable for the shareholders. There used to be in India a law called dividend distribution tax. Company will distribute dividend to shareholder and pay tax on that dividend. So for the shareholder, the dividend was exempt. Dividend was taxable for the company. Everyone is with me? I think you are aware. 222 ABCD was also taxable for the company. ABCD was taxable for the company. And E was taxable for the receiver because it is the receiver who is getting the money. Correct? Now, if you are clear of that tax treatment, that DDT was not applicable on 222E, DDT was applicable on all the other cases. Who declares bonus? Company or shareholder? Company. By declaring bonus, the company was reducing its reserves and saving its own liability because ABCD company was liable. So in ABCD, we said including bonus. because companies are declaring dividend and reducing their own liability. But no company will declare dividend for 222E purposes because company was never supposed to pay tax on 222E. 222E was taxable for whom? Shareholder. So purposely declaring bonus and reducing that reserves and surplus ka value, company was not supposed to do that. I am not paying tax. No, who is paying tax? And therefore in 222E we were not taking bonus. ABCD was taxable for the company, so company was declaring bonus to reduce reserves. E was taxable for the shareholder, company was not declaring bonus. And thus in ABCD they wrote including bonus, and in E they wrote excluding bonus. Now that DDT part is removed. So all dividends are taxable for the shareholder, but in ABCD still including bonus and E still excluding bonus. Ideally they can make all of them excluding bonus now, because in any case company won't declare the bonus just to save tax on dividend. Who is supposed to pay tax? Shareholder. Why will company declare? To make it logical, amendment is not required here. Amendment is required in ABCD, that nowhere we will include bonus, but after removal of DDT they have not made that amendment. And thus ABCD still says including bonus and E still says excluding bonus, if you wanted to know the logic. Clear hai? Last. You all didn't ask me that question, but now you are clear that loan taken in the morning and repaid in the afternoon is also going to be covered here. Interest paid still covered. Now I still have a question, which again you should have asked, sir, but what if it is an extremely genuine case? Genuinely a loan is taken. The loan was taken not with the intention of taking money and not giving it back by secretly transferring dividend. The loan was taken genuinely for the purpose of loan transaction. So they say 222E is not applicable on any transaction in the ordinary course of business. If the transaction is done in your ordinary course of business, we won't apply. For example, banking and finance business. Think about it. Supposingly, I have a finance company, private company. Can I have a finance company which is a private company? What is my job? To give loans to people. Do you realize loan given and loan taken for them is like sale and purchase? One day I only need a loan, home loan maybe. So preferably I should take loan from my own company so that at least my company earns the interest. But if I take loan from my own company and I am beneficial shareholder and company is private company, so for me it is becoming taxable, no? No, sir. Banking business, you have to give loans to everyone, including your shareholders. Any transaction in the ordinary course of business, you have to do it. Is it possible? Is it possible that one of our shareholders is our big customer also? अरे वो customer नहीं है, वो customer. Supposingly, I have a wood company, private limited. Okay, you are the shareholder of my company, beneficial shareholder, and you run a coaching class privately. Outside company, shareholder can do whatever. You need wood. Possible hai? Something like that. So can there be any advance given or advance taken or anything like that in that day-to-day business? That is a business transaction, not a loan, advance or deposit taken for the purpose of diverting money. Such transactions are ordinary course of business. They will always be allowed. Other than this, 222E is going to be mandatory. If it is not in day-to-day business, then 222E is going to be mandatory. Is that clear, everyone? Bro, we are done with, I'll tell you what, we'll be starting point 3. Of what? Deemed dividend. Specific IFOS. But still we can't start point 3 because now we have an amendment. So ABCDE done. We have to start with 222F. We'll start that after a break of 10 minutes. Hello. Are, is everyone a part-time drug consumer, drug dealer? What exactly is wrong with you guys? What statements are you making? Matlab, do you even realize the level of your statement? Chal chhod, forget it. With effect from 1st October 2024. Hello, everyone with me? With effect from 1st October 2024, a new clause has been introduced in section 222, that is 222F. 222F, a new clause has been introduced. This is provided you remember the concept of buyback and the buyback tax that is abolished. So whenever a company is doing buyback of equity shares, do you remember the company was paying an amount to the shareholder? This is against the shares that he is holding. Do you remember that till 30th September on this amount the company is supposed to pay a tax called buyback tax? But from 1st October that buyback tax is abolished, and therefore do we know that the amount received is now going to be taxable for shareholders as deemed dividend under section 222F. It is assumed that the company is distributing dividend to the, it is assumed that the company is distributing dividend to the shareholder. Correct hai? And very important clarification given by them, there will be no deduction against this amount. That means the gross amount will directly be taxable. Whatever you are receiving is your buyback payment, is IFOS. You won't get to minus anything. No deduction against it. The amount received equal to IFOS. The amount received equal to IFOS. But here I have an objection as a shareholder. Please raise that objection. Please raise that objection. You have an objection? What?
We must have occurred cost.
Occurred, nahi, incurred. We must have, it's okay. We must have incurred cost to become shareholder. Yes or no? The cost of shares. What about that, sir? See, this money I am getting against those shares. No. The cost of shares will be considered as a capital loss, and you can take whatever set off or carry forward you want against any capital gain in future. In any case, you know that buyback does not happen with all the shares. So you are still holding some other shares. You will sell them. Will there be capital gains? You can adjust against that. But the cost will be considered as capital loss. Means the receipt will be directly taxable. We won't subtract the cost. That cost will become capital loss. Sir, why that is becoming capital loss? That cost, you understand. What is capital gain or loss? Sale consideration minus cost of acquisition. Here the sale consideration will be considered zero. Sir, why? Because whatever you are getting in buyback, we are not considering it as capital gain. We are considering it as IFOS, deemed dividend. That means capital gain ka sale consideration has become zero. Hello. So the cost of acquisition will become capital loss. Because selling price zero, the cost equal to loss. I give you a numerical example. It is an amendment. We will discuss. But do we know that till 30th September nothing will apply? Till 30th September, if the distribution has taken place, so it is going to be taxable as buyback tax for the company. And shareholder ke liye it is exempt. This whole tax treatment will be applicable from 1st of October. Let us take an example that you have acquired shares at a price of rupees 1000. This share, the company is doing buyback at a price of rupees 1200. So first of all, 1200 equal to deemed dividend under section 222F. Without any deduction, not a single rupee will be subtracted. The amount received will directly be taxable. Sir, but now say, sir, I have occurred. Yeah. Sir, I have incurred cost. This cost that I have incurred was purchase of capital asset or no? Think about it. Sale consideration nil minus the cost of acquisition of 1000. This will be considered as my capital loss, for which I can take any set off or carry forward against any other capital gain. It can be the remaining shares, because all shares are not bought back. Remaining shares ka capital gain or any other asset ka capital gain. Whatever set off and carry forward chapter allows, you can adjust accordingly. Are you clear hai? Fantastic. Everyone is with me? हाँ, तो ladies and gentlemen, that's your deemed dividend 222F. But remember, be very careful. Just like your full capital gain amendments, this will also be activated from 1st of October. Till 30th September, company will pay buyback tax. From 1st October, this is going to be taxable for the shareholder. Understood, everyone? Fantastic. Ladies and gentlemen, that was your whole discussion from start to end on the concept called dividend ka discussion thereby comes to an end. We are doing a chapter called income from other sources. Everything that is not covered anywhere else will come, but certain incomes will be specifically covered under income from other sources. We will not check anything else. We will directly bring them under income from other sources. Correct hai? First was gift, second was dividend, third winning. What kind of winning? Winning from lottery, crossword puzzle, card game, or any other game of luck, chance, any other game in the nature of betting, gambling. And in income tax law, because they don't want to repeat this long statement again and again and again and again and again, to give this long statement, they have kept a short name, a nickname. Hitesh, what do people call you at home? Okay? We all have nicknames which we can't reveal in front of people. No? Duryodhan? No. What was that other name? Chintu? Chandu? Don't say Chandu, Chintu, anything. Okay, bro. Control yourself. Short name. Casual winnings. Casual winnings. Winnings that you have earned without putting any effort. Sir, betting and gambling. Sir, why it should be income from other sources? Please understand. Obviously, it is not salary. Logic understand. It is not house property. It is not capital gain. There are some people who make this their business. But income tax law wants to be very, very clear. We cannot consider betting and gambling as your main business. Betting and gambling will always be considered as a side activity. It will never be considered as your main activity. And therefore, we will put it under income from other sources. Casual winnings will always be taxable under what, bro? Income from other sources, with the following things that you have to be careful about. First, for these incomes, there is a flat tax rate of 30%. In income tax law, there is a section 115BB. Special rates of tax. Section number you leave. Special rate of tax 30%. There is a big full-fledged chapter called Special Rates of Tax in CA Final. From that chapter, only 4 sections are in inter-syllabus. 111A, short-term stock market. 112, all long-term capital gains. 112A, long-term stock market. And 115BB, casual winnings. 15, 20 which became 12.5. 15 which became 20. 20 which became 12.5. 10 which became 12.5. And 30%. 115 double B, special rate of tax. Only 4 sections in intermediate. There is 115 double B A also. BAC. 115 BAC you are talking about. That is new tax regime. That we will discuss. Tax rates. Old regime, new regime. New regime is 115 BAC. Okay. So this is BB, casual winning ka tax rate. BBA is when, when foreigners come to perform in our country. Cold play. That is BBA. You want to know about cold play? I'll show you. The cold play, I want to show. And I know you are happy only, but sir, anything that kills classroom time, we are more than happy, है ना? चलो, तो cold play, if it opens, because there is high degree of network issue here in this classroom, if it opens, so I show it to you. It open, but I don't know whether किधर गया? हाँ ये देख वाइब्रेटर छोड़ जाने दे. I'll send you the link if you want. No, it is not audible. Really? Okay, wait.
Well, the basics of making complicated concepts easy. Within a span of few minutes, they collected roughly 120 to 150 crore rupees. What is the income tax that they have to pay? Whenever a non-resident foreign national sportsman comes to India for game or sport, articles, or appearing in advertisements, or a non-resident foreign national entity like Chris Martin or Russell Peters or that girl Justina Bieber, they come to India as per Section 115 PDA. They have to pay tax at 20% of the gross amount without any kind of deduction. If you were unable to manage tickets to the Coldplay concert, my suggestion is buy Aditya Garbi show tickets and watch him sing. Itane jada joi panakhatni vaate maru
हाँ, what else? हाँ हाँ, background Coldplay का song, fix you. The interest that you took in this, which is not even in your syllabus, is बस exact level of interest which is required, in which, and इतना भी interest नहीं that you suddenly assume that there is something 111 also. हे भगवान, I will need one separate medicine for that. I will get my blood pressure checked. Bro, casual winning. So are we aware? We will segregate our income. Now we know the system. Casual winning 30%, other income normal rate. Say government wants to discourage these activities. So casual winning, if at all you have, we will levy a very heavy rate of tax, that is 30%. 30% is going to be rate of tax. And by the way, all types of betting, gambling also, all types of TV game shows also covered here only. Winning in a show called Kaun Banega Crorepati is going to be covered here only. Forget that. If you think that's a talent-based shows like Indian Idol or Dance India Dance, they are also covered here, flat rate of 30, because that is also by luck. Don't say talent, sir, because everyone does not reach only there. Selected people are picked. You need to have one sad story to be picked. Then only you get picked. Are you aware of that? And therefore, there is some element of luck involved. Casual winnings, flat rate of 30%. In fact, what do you mean by flat rate? Let's be clear. This is very important to note. You won't get any deduction of your expenses. Normally, whenever you earn income, do you get deduction of your expenses? Supposingly, I buy lottery for 100 rupees. Then I win 1000 rupees. So normally, my taxable income should be 900. But your full 1000 will be taxable without any deduction of expense. Because we want to discourage. The gross amount will directly be taxable. You won't get any. You won't get any basic exemption. Sir, why will we not get any basic exemption? Because we want to discourage. That means if this 1000 rupees is my only income during the year, I still have to pay 300 rupees. Normally, if we earn income up to 250, 2,50,000, we don't have to pay tax. But on this 1000, directly we will apply 30. No basic exemption, no slabs, direct 30. That also, we won't subtract the cost of the lottery also. The income received will directly be taxable without any deduction. No deduction of chapter 6A. Now, sir, what? No deduction of. Sir, what is chapter 6A? Deduction for your life insurance, medical insurance, contributions, etc. You know chapter 6A? We have not studied, but some idea you have. Supposingly, I win this 1000 rupee lottery and invest in life insurance. No deduction. This 1000 will directly be taxed at 30%. No deduction of expense, no basic exemption limit, no chapter 6A, flat rate of 30% will apply. The government wants to strongly discourage these activities, and therefore we will directly tax them at a rate of 30%. Do you agree and understand? Do you understand? Casual winnings, even if you make it that your business, even if you make this activity your business, it is going to be taxable at a flat rate of 30%. ये clear है? Fantastic. Next. Any activity. Abhi, what is happening? Winning from the activity of owning and maintaining race horses. Winning from the activity of owning and maintaining race horses. We famously call it OMRH, but this is not a short form which is allowed in exam. So in exam, you'll have to write the full thing, OMRH, OMRH, OMRH. While by looking at it, it sounds the same as casual winnings. You know, for a moment we get an idea, sir, this is horse races, sir. Sir, casual winnings, sir, betting and gambling. So is it not covered here? Nice, sir. You got to put effort in understanding the difference between these two activities. They look similar. They look similar, they sound similar, but they are fully different. If there is only one thing which is same between them, the only common thing is both of them are taxable under IFOS. They are 0.3 and 4 of IFOS, IFOS, IFOS. Other than both of them being IFOS, there is nothing else in common. Nothing else in common. Both of them are IFOS. Sir, they are completely different activities. See, there are two options in horse races. One, I go to the race course and I place bet on that horse. And I win the bet. That is betting and gambling activity. Casual winning, without hard work, only luck. Point number 3, flat 30%. But supposingly I have my own stud farm. Stud farm? Tabela mere. Stable. Astabal. Tabela. Nonsense. Horses. Stable. Quite a few instances of Bollywood representing those stud farms. Most popular being in the current generation is in, my generation, there was a movie called Karan Arjun. Salman Khan, Shah Rukh Khan, they had reincarnation. It was recently re-released. But your generation probably may have seen Saif Ali Khan's movie Race. Pehli nazar mein kaisa jadoo kar diya tera ban Race. No idea. Basically, in that movie, that guy was owner of a stud farm. What is the role of owner of stud farm? He will buy horses. He will feed those horses. Maintaining a horse is expensive. He will train those horses, breed those horses for making them fit to run races. Then he will appoint fit riders who will run the race and incur expense on the rider, on the horse. Basically, I am putting efforts in making the horse capable for a race. And then finally, if my horse wins the race, I will get a prize. This is not casual winning because I have put effort, I have spent time, I have invested money, time, energy to make my horse and my rider fit for the race. What is casual winning? If someone comes and places a bet, it is casual winning. Without any effort, directly on day one, is coming and placing the bet. But I have been working on this for months and months. That is OMRH. This is not casual winning. And because this is not casual winning, the rate of tax is going to be normal rate. Means, will we get basic exemption and slabs? Yes. Will we get deduction of all these expenses that I was talking about? Like maintaining the horse, feeding the horse, rider salary, will we get deduction of expense? Yes. Will we get basic exemption? Yes. Will we get chapter 6 deduction? Yes. The entire tax treatment will be normal because here we have put effort, it is hard work. Casual winning is when you do betting, gambling. Here we have done hard work. What is the only thing common between 0.3 and 0.4? Both of them are IFOS. Other than both of them being a part of IFOS, there is nothing in common. Is that clear? Now, sir, why is casual winning in IFOS? Because government wants to assume that betting cannot be main activity. Correct? Now, second, sir, why is this IFOS? Because ultimately here, so that person is spending daily time and making his normal business, no? Then why is this IFOS? You understand? Casual winning IFOS ka logic clear? Why? Betting can't be main business. Now, why is this IFOS? Sir, here you will make profits only if your horse race only if your horse wins the race. Here you will make profits only if your horse wins the race. Correct? Hai? That means you are dependent on an animal. Sir, in school we were taught man is the smartest mammal. Human, my bad. Human being is the smartest of all. And you are depending on one animal to generate profits for you. How can a human depend on animal? And if you do, it will be probably your side activity. It can't be main activity. Are we clear? Are we clear? Human dependence on animals can't be main activity. So betting will be IFOS. OMRH will be IFOS. Other than both being under IFOS, there is nothing in common between them. Nothing in common between them. Full tax treatment is different. Here it is normal rate and you get all your deductions. And there it is special rate and you won't get any deduction. Because that they want to big way discourage. Is that clear? But there is one last aspect that you have to be careful here. Last aspect. Because institute starts asking questions where your brain stops thinking. So you understood, sir. Betting can't be main activity and dependence on animals cannot be main activity. So both of them will be IFOS. Betting is casual winnings, so special tax treatment. This is normal day-to-day income, so normal tax treatment. But did you notice in this whole discussion, they have mentioned horses. They have made mention only for horses. Correct? Hai? OMRH is specific. Sir, first, there is logic in that also. Why they have mentioned only horses? Because horse is one animal whom we can perceive, imagine, relate to races. When we talk about races, the only animal coming in our imagination is horse. Because horses are made to, their body structure is made to race. There is a famous proverb in Hindi. Whenever you find someone who at a very young age is in terms of okay, at a very young age. अच्छा वो young age के लिए okay, let me see if you feel that has reached a respectable position and has achieved something maybe earlier. You may take lots of time to do this, and when someone is asking you your age, oh, you're only this much, so early in your life you have done so much, you will go very far in life. Lambi race ka ghoda hai. There is a proverb in Hindi, lambi race ka ghoda. Yes, but you never hear anyone saying lambi race ka kutta, gadha. No. You heard people saying, kya? Murga? No. Because the only animal that we can associate with racing is horses. And therefore, when we talk about races, we refer to horses, which is why income tax law consciously mentioned only horses. Now, this is where institute starts its taণ্ডava. Hello. Institute in exam is asking, owning and maintaining race camels. Owning and maintaining race dogs. No. They can mention. You can't say no, you can't mention. Dogs will. No. In IFOS, when they have mentioned specifically only horses, it means that by chance, if there is any question on other animals, so you have to put it under PGBP. You have to put it under PGBP. Because IFOS mentions only horses. There is intention behind mentioning of horses also. I just told you that horses are the ones which are associated with racing. But by chance they ask you camels or dogs. PGBP. Understood? And casual winning is completely different. Only common thing is IFOS. Okay. They sell dogs, bro. That is stock in trade. They are not making the dogs run races. There are pet shops available. No, bro. They are in the business of buying and selling. I mean, that is PGBP only, no? No, selling of horses is also PGBP. Racing is IFOS. Hey, Bhagwan. We are doing animal husbandry. Shall we? 0.5 of special cases? क्या? अरे capital gain is over. Specific IFOS. When I did casual winning itself, no, someone should have asked this question. In casual winning itself, I spoke about betting, gambling subjected to a special tax treatment. No, at that time only you should have asked, sir. These days, betting and gambling, like everything, I have to tell this to my son. Every time he is watching TV, I is sitting like this, and I hit him hard. Bola, nonsense. This is bacteria. You can't be she's sitting like this. And once I tell him, remove your finger, but after a few minutes again, kids have this habit. Then I slap him hard. Then for 2 hours, he does not again. Because, please understand, our hands, arms touching all the places around us, your books, pen, everything contains some bacteria. There is some good bacteria, bad bacteria. School mein teachers used to tell us, khana nahi. These days, everything is becoming online. Basic necessities, bro, food, clothing, shelter, also online. Food, uncooked, so we go for Misho. Licious. Dmart. Food, if we want to call for rice or wheat or anything, we use the atta, etc. DMart है, Instamart है, Zepto है, Blinkit है. And cooked के लिए we have Zomato, Swiggy. Clothing, yes, of course. I thought you are giving example of clothing. So whether it is Meesho or Ajio or Myntra or what else? Nykaa, Flipkart, H&M online हो गया. H&M, Amazon also, of course. Shelter, whenever I want to check the prices of a particular geography, no, we go to 99 acres, Magic Bricks, etc. websites, yes or no? Health and education, NetMeds, Practo, doctors give online consultancy. Education, hi. Everything has become online. Don't you think so? Basic necessities. So why will betting also? Wait, betting has also become online. We no longer go actually to any club to go and place our bet or a race course. We are placing online bets. Most popular, Dream 11. But then Dream 11 is just one of the companies. There are a huge number of companies providing online betting portals. We sometimes win over there, sometimes only. We call them winning from online games. Basically, can I say, this is also casual winnings, just that casual winning has also become online now. And this will also be a part of IFOS, because casual winning always was IFOS. And this will also be having the same tax treatment as casual winning, flat 30. See, please understand, 0.3 and 0.5 are same. Only thing is, one is offline, one is online. So yes, this will also be flat 30. But there is something specific to online games which does not happen in physical betting. Please understand. In physical betting, I go to the club or the race course, I place my bet, I win or I lose, and I come back. It's a one-time transaction. KBC, you win, you lose, you come back. Online gaming is a continuous process. Online gaming, your interaction with that organization like Dream 11 works like a bank statement. You deposit money, from that money you place bet. If you win, so they will increase your balance. If you lose, so they will reduce your balance. There will be opening balance in the year. There will be closing balance of the year. There is continuous activity throughout the year. It is not a one transaction, win or lose. So physical betting, you win, you pay 30%. Story is over. But in online games, you know, my opening balance and my closing balance will not correctly reflect my transactions during the year. So the only reason why 0.5 is separate from 0.3, tax treatment is fully same, flat 30, no expenses will be subtracted, no basic exemption. The only thing that is separate is that here they have given a formula to calculate your winnings, because this is a one-time transaction. So in that transaction, whatever you win is your income, but this is a continuous process. So how to calculate your income from that continuous process? There is a formula. Take your closing balance. You understand that that online portal will maintain your statement like a bank maintains your passbook. In this, you will add all the withdrawals that you have made during the year. Closing balance plus all the withdrawals. From this, you will subtract your opening balance, which will obviously be closing of last year. And when I am saying in bracket you plus, matlab in the total you obviously are minusing. That much math you understand? Or?
Yes.
Matlab we are minusing these two things ka total. Minus the non-taxable deposits. Minus what, sir? The non-taxable deposits. Observe mat karo, because you are not going to understand anything. Someone like trying to analyze. Okay? Now let me explain how it works. That online gaming company will ask you to create an account by giving your details. Initially, you may have to contribute a bare minimum amount. Sometimes they grant things like bonus, etc. Please understand, when you contribute any money, that's not a profit that you have earned. That is my contribution. What is my profit? When I win any bet, or if they give any free bonus. These are things that I am getting free of cost. So the statement will somewhat work like a bank passbook only, where we will have particulars. If we lose anything or we withdraw anything, so the organization will debit my account. If I contribute any fund or I win anything, so that organization will credit my account. And then every transaction will change the balance passbook. So let's start with your opening balance. This is nothing but closing of last year. Say 2 lakh rupees. You understand this is not income of the current year. If it was taxable, it was taxable. Then during the year, I made a deposit. Deposit if I will make, so where will I write? Credit side. So the balance became 3 lakh. The company realized that this person seems like he is going to bet a lot. So to encourage you in that greed, sometimes lot of gaming companies credit say bonus. They give you bonus of 50,000. So your balance becomes 3 lakh 50. Now that you get the free bonus, now you feel the need or the greed to play a bet. So you bet some amount and you win some money. Starting may, if the first bet you lose, no, then you may probably take an exit, which company does not want. The company lets you win first. So that makes your balance 4.5. Correct? Eh? Now you are greedy. You are like, wow, I know the game. I know how to play. So you go and bet a bigger amount and you lose. The moment you start betting big, no, you will lose. You lose 3 lakh rupees. Balance became 1.5. Now that you lose 3 lakh rupees, company realizes that you may probably take an exit. You actually also withdraw some balance, say 1 lakh rupees, remaining with only 50,000. Company does not want to let you go. Company this time is giving you bonus of 2 lakh, making your bonus amount plus your balance 2.5. The moment you get such a big bonus, you again get the greed of playing a bet. So again you place a bet. This time again you win 1 lakh. The balance becomes 3.5 lakh. Finally, again you become greedy. It's a never ending cycle. You lose 1 lakh and that's your closing balance of 2.5 lakh. Of course, this is your closing balance. Okay? Year is over. Now whatever you do in the next year. Now the whole idea here is that we want to make it clear. If you have lost anything, to hell with you. To hell with you. We are not concerned about your losses. We will see if you have won anything. You understand these are your winnings. But in this, we can't take this as your winning. Because this was not a winning. This you only contributed in the balance from your own funds. So this is not winning. So effectively, the rule is that they want to tax this much. They want to tax this much. What is this total coming to? 4,50,000. Do you realize when we tax these winnings, the free winnings and the free bonuses, without adjusting any expense or any amount, without even adjusting your losses, is that target? And on this 450, you have to pay 30% tax. Is there logic? Now this logic is incorporated in the formula. Chalo, let's play with the formula. First, we have to take the closing balance. Take the closing balance. 2.5. In this, you add your withdrawals. What are your withdrawals? Do you understand? All the debits. All the debits are withdrawals. Your loss is also like a withdrawal only. Anything that the company has debited is your withdrawal. So that comes to a total of. So that makes this total 7.5. Correct? From this, what are we subtracting? Your opening balance. What is opening balance? 2 lakh. And what is non-taxable deposit? Non-taxable deposit is a cash deposited by me, which is not an income. You can't levy tax on that. How much is that? Only one transaction. That is 1 lakh, making this total 3. And then when we subtract, basically to tax this amount. The formula is such that all your winnings and your free bonuses will become taxable. They could have said the winnings and the free amounts credited instead of giving a complicated formula, but the complicated formula ultimately will bring you to that answer only. You correct, hai? Everyone? And of course, this is also casual winnings, not offline but online. So computation is a little different. Tax rate will be flat 30%. However, OMRH is not casual winning. There is effort put. Please do not mix this with OMRH. Are we clear on this? Everyone? That, ladies and gentlemen, is your point number 5 of which list, bro? Which list? Incomes which will be specifically taxed under the head income from other sources. Chalo, fantastic. Let's go ahead. Forfeiture of advance, token, or earnest money on or after 1st April 2014 will be considered as taxable income under IFOS. I'm too lazy today. I don't want to explain this one point. I am too lazy today. So this point you manage by yourself. I will go to the next point. Correct or no? क्या हाँ चलेगा two tight slaps I will give you. You should have said, sir, we have already covered this. ये चलेगा. Who are you? जेठालाल. चलेगा. नहीं चलेगा नहीं. We have done this. Done where? I may be lazy for 100 things in my life, not when I am doing my job. Not here. I can be lazy for everything else. Sometimes I want to feel lazy, not to go and work out. But I still go. Why? Marwadi, no, already paid 3 months advance to sir. Sir has already come, and if I cancel the class, it will be counted as a turn. So chalo, let's go and recover the expenses income. Ma'am and myself, we go together. People in the building ask, oh, couple goals. Bola, no, discount. 2 people discount. Arey, 1 person ka full charge, second person ka half charge. So if we do separately, so full. So we are doing in 1.5 fees. Couple goals, discount. Ladies and gentlemen, I am not lazy when it comes to my subject. Why am I not doing this? Because we have already completed this. Fantastic. Next. Interest on compensation or enhanced compensation. Interest on compensation or enhanced compensation. Whenever your property is compulsorily acquired, compensation is taxable under capital gain, year of first installment. Enhanced compensation is taxable under capital gain, year of final order. But bro, we are talking about the interest. And about this, remember three things. Supposingly anybody is taking you in police third degree interrogation room and doing interrogation with you, trying to extract some information from you. You know how police third degree works? They hit you, unless and until you speak the truth. Police ka rule is the moment you speak the truth, they stop hitting. Sir, how do you know all this? Crime shows. Experience. Right, don't sell any of the stuff which you do. Police ka rule is they stop hitting the moment you start speaking. So police is asking you, what do you know about interest on compensation? Just give these three things. First, interest on compensation will always be taxable under IFOS. Capital gain will contain only compensation. Compensation is selling price of your asset. Interest is delay in compensation. IFOS. Always taxable under IFOS. Second, this interest will always be taxable in the year of receipt. Always taxable in the year of receipt. See, your property is compulsory acquired in 1 year. Some years later, you get compensation. And for that delay, they are paying you interest. Now, in due basis, some interest is taxable every year. But poor guy, assessing officer cannot open 10 years ka file only to add little interest. That will waste a lot of time. So, we will take tax on interest, not on due basis, but finally in the year in which you receive. Like compensation also, we did a specific year, no? First installment, enhanced compensation, final order. Interest will be taxable in the year of receipt. You understand? Interest is coming for a delay in compensation. So, some interest will be for all the years, but we can't open so many files. So, we will take tax on the interest in the year in which you have received. But your assessee will have an objection. You want to try? If the full interest is taxable in the year of receipt, the assessee will have an objection. Okay, let me make the question simple for you by explaining the question. My property got compulsorily acquired. Some years later, I got my compensation. So, I am getting interest for this period. Some interest belongs to all the in-between years. If I pay due basis, so I will pay tax on little interest in all the years. But AO does not want to open so many files. So, he is making full interest taxable in this 1 year itself. So, as an assessee, I will have a problem. Come on, tell me. By the way, the amount on which I am paying tax is same, no? But if I pay the tax on full amount directly in 1 year, so the full amount will go and bring me in a higher slab. Do you understand and agree? Yes. So, assessee said, sir, if I offer little interest on due basis, so my slab rate won't change. But if I take full amount here, then I will come in a higher rate. That's not fair. So, bro, will make it fair for you. Don't worry. Whatever we will tax is only 50% of what you have received. We will tax only 50%. If you receive 1 lakh, pay tax on 50,000. If you receive 2 lakh, pay tax on 1 lakh. If you receive 10 lakh, pay tax on 5 lakh. Only half will be taxable. We will give you a flat 50% deduction. We will give you a what, bro? Flat 50% deduction. So, supposingly I get 5 lakh interest. I have to pay tax on 2 lakh 50. Whenever I receive under IFOS. Always IFOS, always year of receipt, flat 50% deduction. Bro, always IFOS, always year of receipt, flat 50% deduction. Say it again, please. Three things and police will do. Three things. Understood? Always IFOS, always year of receipt, and flat 50% deduction. Interest on compensation and enhanced compensation. Everyone is clear on this? Hello. Next, in one of the questions of capital gain, we had compensation and then there was interest. I told you wait for IFOS. Now understand, in that question, supposedly there is 2 lakh interest and they give 1 lakh court expense or 50,000 court expense or anything. Ignore court expense because anyways we are taxing only half. So we are not giving any other deduction. Whatever you receive, half of that is going to be taxable. You understood? Flat deduction, no? Flat 50% deduction. Everyone is clear on this? Hello. Point number 8. Of which list? Incomes which will be specifically taxable under income from other sources. Family pension. So early in your syllabus I had discussion on this. When an employee retires, the employee gets pension. It is taxable under salary. After death of employee, the spouse will get pension. The spouse did not have employer-employee relationship, and therefore this pension will be taxable under IFOS. And I always talk about my grandfather here. 1995 to 97, he got pension. Salary. 1997, 5th March 97, he expired. 28 years now in the month of March. My grandmother even still is getting pension. She will turn 82 in April. Even today she is getting pension. That income which she is getting is not taxable under salary. That will be taxable under IFOS because she did not have employer-employee relationship. Is that clear? But wait. Against this family pension, we will give you one deduction. We will give you deduction of 1/3 of the amount that you have received. Sir, 1/3 of the amount that you have received, or rupees 15,000 per annum, whichever is lower, and only the balance will be taxable. Like how in interest on compensation we are taxing only half, here also will give you deduction and the balance will become taxable. What is the deduction allowable against family pension? 1/3 of the amount received or 15,000 per annum, whichever is lower. 1/3 of the amount received or 15,000 per annum, whichever is lower is going to be taxable. Let's take example. For example, my grandmother is getting 8,000 rupees per month. For example, my grandmother is getting 8,000 per month. I want from you the taxable amount. Taxable amount. मार खाने का रोज दे उसको. What will be the taxable amount? 15,000 will be taxable amount. Consume poison, kill yourself. You don't understand the question. What is the question? एक मिनट, question क्या है? What is the taxable amount? 15,000. 2,666.
1/3 of the amount.
What is the amount received? 8,000. So 1/3 of that amount received. You also 82,000. If you are asked taxable amount, no, you can't give deduction amount. You get marks for answering the question, not answering whatever you have decided. सही है, छोड़ दो एक मिनट. Therefore, the amount that grandmother has received is 96,000. कोई मस्त है. 15,000 per annum का deduction they are doing against 1/3 of monthly amount. मस्त है. What is 1/3 of this? 32. What is the other amount? 15. Lower of them 15. So 96 minus 15, 81,000. Hey Bhagwan. Second attempt. Supposingly my grandmother is getting 3,000 per month. Now do it correctly, please. Taxable is 21,000. Hey, Bhagwan. I thought it was easy. 12,000 is taxable. मस्त है. Clap for the child here. ताली बजाओ बच्चे के लिए. एक मिनट. You will answer. Received is how much? Received बोल. नहीं ले पागल. हाँ तो received is total how much? 36,000. Very good. What is the first thing that we take? 1/3. How much is that? 12,000. What is the second thing? 15. So your answer is wrong, bro. Your answer is 24 because 36 minus 12,000 का deduction equal to 20. What was my question? Taxable. You can't say deduction is taxable. And on what moral ground are you laughing at him? Nothing. And we will have to keep a special session to discuss how someone got 21,000. On the basis of which maths someone got 21. You did 24 and then you said 1 month ka pension discount. So from 21 you subtracted 3. I am trying to work out mentally how 21 came, how 21 can come. 15 from where you minus? Acha, so you took higher of. Acha, you thought deduction is whichever is higher. Hey Bhagwan. What is my name? एक मिनट. हाँ वो नहीं वो Zoom में नीचे लिखा है. Confirm. हाँ काय झालं? बच्चे any doubt? Any doubt? नहीं? You're comfortable? You understood 1/3 or 15 whichever is lower. Deduct that and the balance will become taxable. Hey Bhagwan. With effect from assessment year 25-26. अर्थात amendment no bro. If you are opting for the new regime of tax, if you are opting for the new regime of tax, auntie is not making the new regime attractive, she is making it look attractive. The deduction that we are giving you will be 1/3 of your amount received or rupees 25,000, whichever is lower. Or let me speak the amendment in words. The maximum limit in new regime will be now. See, I'll tell you some history of the last 2 years. When new regime came, the first time auntie said no standard deduction in salary and no family pension deduction in IFOS because we remove all deductions and exemptions. Then she thought, no, like that people won't take new regime. So she said other deductions not allowed, but salary ka standard deduction allowed and family pension also allowed. 50,000, 15,000. And now this year, to make the new regime more attractive, more looking attractive, the two limits in new regime, salary which was not allowed is now more than old regime 75 and family pension which was not allowed is more than the old regime 25. But do you understand comparison with difference between old and new? They are extra 25. Your extra deduction is only your extra deduction is only extra deduction 10,000. 15 ka limit is becoming 25. You will save how much tax on that? 3,000. Highest if you fall in 30% rate. Bro, take that from me. Not that literally I will give you, but these small benefits will not reflect how disadvantageous the new regime can get if in the greed of new regime ka lower tax liability you stop taking life and medical insurance. Ladies and gentlemen, 10 years down the line when the sole breadwinner dies or you have any medical expense, you will regret opting for new regime and foregoing your policies. If middle class is disciplined enough to maybe stop making all the other investments, but at least don't quit your life and medical insurance. You can't expect that discipline from the middle class. They won't do that. They will rather, they have more disposable money at their end with the tax completely saved. In your exam, it is 7 lakh only. That 12 lakh will apply for May 26. But that money so saved, they will end up investing in crypto, F&O, they will end up buying expensive mobile phones because they are saving tax. They will end up buying stuff which is basically a complete waste. I know of a friend, middle class, someone in the family passed away. He inherited some 20-25 lakh ka FD. Most of our friends suggested him that later on, when you plan to buy a new house or new office as an income generating asset, this will be very useful for you. Keep it with care because your new house is under construction. Maybe you will need funds over there. He purchased a car. He purchased a Royal Enfield Bullet. He purchased one expensive mobile phone, iPhone of 1,50,000 or 2 lakh, roughly that highest version of iPhone. And by the end, he was left with nothing to make investment. Now that car, that bike, and that iPhone, after a point, well, thank God there is no question. Otherwise, you would have been solving the question right. These are not income generating assets. They are liabilities. Home loan is asset, car loan is liability. But that trap in which the middle class falls, you will never come out of it. Never come out. Coming out of middle class requires next level of efforts altogether. And this disposable income, I'm not saying everyone will be like that. If you have the discipline of investment, then probably you will be finding it of any use. But for now, yes, there is an amendment. Family pension ka deduction, old regime maximum 50. Because 1/3 or maximum 15. New regime 1/3 or maximum 25. And in that also, do you remember this? If the family pension is received in the following cases: member of armed forces, what? Who has been a recipient of bravery award, gallantry award, PVC, MVC, Mahavir Chakra, Paramvir Chakra, or died during duty without award also. Died during official duty. So in that case, the family pension, both these cases, in fact, the family pension is going to be fully exempt. Do you remember this, bro? Yes. In both these cases, the family pension is going to be completely and fully exempt. Correct hai? Fantastic. Point number 9. From the list of incomes which are specifically taxable under income from other sources, directors' sitting fees. Directors' sitting fees. Do you know that in a company, directors get money for attending, short form is comfortable, board meeting? Are you comfortable? There is general meeting, AGM, EGM, and there is board meeting only of directors. Directors of a company play double role. They work as employees also and independents also. When they are working as an employees, company final accounts is studied by you guys. Final accounts of companies. They are given something called managerial remuneration. This managerial remuneration is taxable under salary. Why that laughter? Managerial remuneration is given to directors. Acha, that laughter of making fun of each other, that see, you and me both have forgotten there was something called managerial. Company final accounts. In inter or foundation, where it is? Inter. And your topics are divided. Accounts ka topics are divided amongst teachers. No? So company final account, who did? Managerial remuneration will be taxable under income from. Managerial remuneration will be taxable under income from salary. Because at that time you are playing the role of employee. But to attend board meeting, at that time you are an independent. To attend board meeting, what we will pay you? Sitting fees. This sitting fees is going to be considered as IFOS. Director sitting fees, all the directors of companies who get money for attending board meetings, they will be called sitting fees. It will be called sitting fees. It will be taxable under income from other sources. ये clear है? Everyone? Chalo next. Likewise, are you aware that in our country, MPs, members of parliaments, and MLAs are also given something called sitting fees. MPs and MLAs are also given sitting fees. Cheating fees? No. Sitting fees. He's saying cheating fees. To attend sessions. Do you know when the parliament is in session? By the way, parliament is not session in session full year. Monsoon session, budget session, winter session. So rest of the year they have to work in their area for their public, no? Same is the case of state assembly. Assembly is in session for limited period. Rest of the time they are in their area. When they are attending, can you believe this? They get money for attendance. They get money for attendance. If a member of parliament or a member of assembly is present in parliament, you get money for attendance. That attendance ka money, that sitting fees is going to be taxable under. You know there is logic behind this being taxable under IFOS. It is not salary. Is the only explanation that you got to understand. Because when a member of parliament is sitting over there, he is not employee. He is public representative. He is not government employee. People have voted for him. He is representing his locality. So that is not salary. He is not employee. Obviously, it is not house property. Obviously, it is not business. I do agree that some people make it their business. Some people make it their family business. But officially, it is not business. It is not capital gain. What are you left with? Sitting fees will be taxable under income from other sources. But here now, do you remember? It's all about IYKYK. Do you remember that along with the sitting fees, they also are given something called daily allowance? क्या फेंकता conveyance? कुछ भी nonsense. Daily allowance, and they are given something called constituency allowance. What about these two? Daily allowance and constituency allowance are going to be fully exempt. 1017. They have to pay tax only on sitting fees. Daily allowance and constituency allowance are going to be fully exempt. Only sitting fees is taxable under IFOS. Is that clear? Hello? Fantastic. Next. Any income in the nature of royalty will always be taxable under income from other sources. You know why? Sir, see, understand. Royalty is basically on an intangible asset. When I create the asset, I have put one-time effort. Thereafter, I hand it over to you. You are using it and paying me recurring amount. I am not involved in day-to-day activity, therefore it is not PGBP. Royalty is basically investment in intangible asset, a one-time effect. Supposingly there is an author who write books on direct taxes, 5 books for final, 2 books for inter per year, and highest coverage of question answer across the country that author has in his book. No one even claims that they have more questions. Suddenly you, who is the owner of a very big publishing company, find that this author is the best thing that can happen to my company. You go tell that author that I will sell your books. I will do the printing part. You just create the book and give it to me. I will do the printing, publishing. Unsold stock will be my loss. Every time a book is sold, I will give you a share on that selling price. I will handle delivery, dispatch, everything I will handle. I will give you a share of every unit sold. Do you understand this? Once the author makes the book and gives it to the company, then the author will not be involved in just the bank account on the basis of daily sales. Ta-da-dang, ta-da-dang. Because you are not involved on a day-to-day basis, royalty income will be taxable under income from other sources. PGBP can be something with which you are daily involved. Every day you go, you do the admin, you do the finance, you do the accounts, where you are not doing anything, creating the asset, ending it over. As good as investment income. Instead of dividend from shares, you are getting dividend from your intangible asset. As simple as that. You know, property ka rent would have also been here if we did not have a special head of income. because that is also investment. We are not daily involved. But here we have a special head. ये clear है? Logic if you want to know why royalty will be under income from other sources. Next, point number 12. In which list, bro? Compensation for modification in terms of contract with a condition that if it is not taxable elsewhere, if it is not taxable elsewhere. Compensation for modification in terms of contract if it is not taxable anywhere else. Supposingly you start a coaching class. You say, sir, will you come and take the lectures in my class? Of course I will. That's what I'm made for. That's my profession, of course. But there is a certain amount which I expect every time I work for a coaching class. There is a certain expectation. But your class is new. So my expectation is basically more than your collection. Bro, you have other subject teachers also. You have your rent, electricity, admin cost also. You have printing and stationery also. Sometimes one light is not working. Sometimes one fan is not working. One AC is not working. All those are expenses. Plus the headache. And my payment is more than total collection. Then you give me an offer. Can you take less now? We will grow together. No, it's a scam. No one grows together. No. I am not going to fall for that trick one more time in life. Take less in the beginning. Later we will increase. Bro, that later never comes. So I am not going to work below my expectation. You have to pay me. You are the one who has decided to invest and start. No. Then you have to pay me. You said, okay, done. Okay, done. Just an example. Supposingly your full batch ka collection, with the limited number of students that you have, and beginning may you are charging less fees. Supposingly full batch you are collecting only 3 lakh rupees. I am saying to do one batch, I will take 10 lakh rupees. Still you are ready to pay. Bola, no problem. For me, it is not an expense. Consider it as an investment. Because I know if you are there, so in future, I can make a strong team. And one day, there won't be any place to sit in the classroom. Of course, that day you can't be expecting proportionate increase. If you are getting good from the beginning, then you have no expectation of increment. But in the beginning only, if you are given less, then there will be expectation of good increment or no. So I said, okay, this because you are paying me good amount, maybe for 2 years, no increment. But after 2 years, there will be 2 years, no increment. Correct? Hai? Now, please understand. When you are ready to pay me 10 lakh rupees in a batch where your total collection is 3 lakh rupees, you would want me to stay, no? Not that in future, because of my name, if there are more people and I am only not there. So you do a binding contract with me. That now that I am paying you this much amount, whatever you are asking for, you can't leave my organization for 5 years. Which makes sense. Don't leave for 5 years. So in the later part, whatever I have paid you more in the beginning, I will recover. Which basically, it's prudence. It is common sense. No problem. If you leave, you have to pay compensation of 1 crore. If you leave, you have to pay compensation of 1 crore rupees. Correct? Now,
You can do partnership.
Who can do partnership? Class owner can't do partnership because in partnership, then class ka expense also I have to pay. Partnership mein to you are having share of loss also. Why should I take that? You are the owner. No, you decided. I never wanted to invest. If I had to invest, I have my own office. I have own office, I have teaching skills, I have admin skills, I have finance to start the class. Why am I not doing it? I never wanted to take that headache.
Sir, you will tell that I will invest. You just teach.
So what's your offer?
Please come later.
नहीं लेगा. नहीं. मतलब you are saying he is giving equity. That is a risk for which I may say yes or may say no. Because you give me equity, you give me 50% equity, bro. Your brand won't be worth 5 lakh also in 5 years later. So what? Equity का offer I can expect. If I expect that 5 years later your brand is worth 500 crore, तो ठीक है 50% में I am getting 250 crore. That is a risk, but I refuse. I said no. I want cash on. I don't want equity. Clear है? Under a binding contract. That I understand. कि चलो ठीक है. That starting में you are paying me more. I understand you are suffering losses. Later you can recover. Supposedly during those 5 years, someone is coming and saying, sir, 100 crore. Are you coming? What will I say? No, I am in contract. I can't come till 5 years. Well, no, sir. Right now, if you come 100 crore. After contract, if you will come, I won't give anything. मत जाओ. Bro, एक मिनट. एक मिनट. Why are you saying मत जाओ? Your batch. So I will complete your batch and go. Final में you can come there, no? Why नहीं? I am only teaching. You are interested in me or projector? Projector. Then don't come. That's your choice, no? See, whoever took admission on the basis of me will continue. Simple hai. Otherwise, there will be some replacement. By chance, if I go and tell the original class owner that I am getting somewhere 100 crore ka offer, if the class owner is my well-wisher, class owner will say, ja beta ja, I will manage. That class owner, the moment comes to no figure, maximum what can he say? Pay me that 1 crore as per contract and then go. And in 100 crore ka recovery, I don't mind also paying. If you understand. Like if you understand, I can in fact offer के next 2-3 batches your direct tax faculty का salary you take from me. अरे 100 crore no. And when you get to see so much money, you go crazy. You don't understand what purchases you are making. Why should I pay for the new direct tax का professor? But ठीक है, I am paying. So class owner lets me go. Have I paid compensation to the class owner due to modification of terms of contract? Taxable income for the class owner under PGBP. Because this loss he is suffering because of me going, he will suffer in PGBP. So the compensation received by the class owner should be taxable under PGBP. But what if I tell you that because I left, class closed? Is that possible? Is that possible that a faculty left and the class had to close down? Bro, I don't know about the future, but in the past it has happened. The class with whom I used to work in Kerala, I used to take 2 batches per year. 15 days ka batch of direct tax. One student they used to charge 8,000 rupees and 200 students they used to get. 200 into 8,000 made it 16 lakh rupees ka collection in 15 days. And 2 batches means 32 lakh rupees annual collection. That also minimum I am saying. In that, because first batch, there was no student, hardly no one knew me in Kerala. No one knew me in Kerala. First batch, he still paid me whatever I demanded on the condition that your increment won't be proportionate. So my payment was, for 15 days, it was only 3-4 lakh rupees. Only 3-4 lakh rupees they used to pay me for 15 days collection. Out of the 16 lakh they are getting. So they used to make a profit of roughly 20 to 24 lakh rupees from me in a year, which came to an average of 2 lakh rupees per month. With that, they used to run the admin overheads of the entire organization for the full year. The rent, the electricity rent is very low in Kerala. Electricity ka charges are there and staff ka salaries are too less. You can't compare them with Mumbai ka range. 2 batches of mine used to recover. So all the other batches that used to run, collection equal to profit because overhead cost already recovered. After I left, for a very big period, they could not continue their CA का work. They primarily focus on foreign courses because Malayalis go to Dubai after their graduation. तो दुबई में ACCA का डिमांड है. In India, it is of no use. You pursue ACCA, think first, do you want to settle in Gulf? Otherwise, in India, chartered accountancy. They focused on that for a very long period. They could not restart. Recently, they have restarted their CA. Very recently, they have restarted their CA wala part. Couple of subjects, but direct tax still they have single digit admission. 200 था once upon a time. So if the class owner continues the class, the compensation will be PG. If the class owner, अरे bro, Edapalli. If the class, by now you must have guessed also. You know, we can't take the names in the recording. And we can't take the first alphabet also because the two main coaching classes of Kerala, both names start with the same alphabet. So let's not discuss the names here. But yes, by chance the class owner has to shut down the class. If I will not be there, then class will shut down only, no? Lecture. Other office. Cabin, admin office, passage, toilet, classroom number 2 and classroom number 3. So the lecture right now is in classroom number 2. So then that class owner refused to pay tax. You know why? Sir, I have shut down my business. So there is no PGBP. And that is when Auntie amended IFOS chapter and brought this line saying, you got compensation. You are receiver, pay tax, pay tax, pay tax, pay tax. If business is on, then PGBP. If business is shut down, IFOS. If business is on, then PGBP. If business is shut down, then IFOS. So therefore we have this line. If not taxable anywhere else, then it is going to be taxable here. Cut. No, what am I doing to you that you are saying no? Huh? Acha, no. No, yes. Yes, increment. No. We'll go for a protest. In front of the other batch only we start protesting. Sir, direct tax faculty salary badhao, salary badhao. Let's do a trial, okay? I will say tax faculty ka, you have to shout. Salary badhao, salary badhao. Okay? Start. 1, 2, 3, start. Tax faculty ka. Fantastic. We'll do that after class, okay? In front of the new batch. Jan 26 ka batch. क्या बोला commission? Bro, how much you want to earn? By the way, that for him will work as IFOS only. Because any income not covered anywhere else will become IFOS. What a practical experience of IFOS. Abhi काम धंधे पे थे. So compensation for modification in terms of employment. Everyone is clear? Hello. Next. Rent of open, vacant, plot or land is IFOS. Rent of open land will be IFOS. Why? Because it can come under house property only if there is building. So only land won't go there. What are my options? Obviously, it is not salary or capital gains. But yes, there is a fight between business and IFOS. See, is it possible I have an open land and I regularly let it out? I can put it under PGBP. So, if make it clear here, this will come here only and only if it is not PGBP. This will come here only and only if it is not PGBP. Only if it is not PGBP. If you are doing it on a regular basis, then put it under PGBP. If you are doing it as a one-time transaction, then put it under IFOS. Next. Okay, ladies and gentlemen. Composite rent. Sometimes you will get rent of house and along with house, other assets. Possible hai? We will have to decide whether this rent is separable or not separable. If we are able to separate it, then house ka rent will go under section 22, but other assets, now this is what we have studied before. If I do it daily, so yes, nahi, PGBP, but sometimes IFOS. And when they are not separable, so one thing please clearly understand, it will never go in house property, because other assets ka rent cannot come under house property. Like a hotel, if they do it regularly, to PGBP, and if they do it sometimes, so means, can I say income number 14 also will come under IFOS only if it is not covered in PGBP. So the last few incomes are not direct IFOS. The last few incomes are IFOS if they are not covered anywhere else. Then only they are going to be IFOS. If they are covered anywhere else, they are not going to be IFOS. Is that clear, everyone? You have a lecture after me? Yes. What time? 5, eh? So I will be extending the class a bit. I am giving you a break of 5 minutes now, because this is where the list of specific IFOS is over. Now we will go to the other part of the chapter. These are incomes which will be taxable under IFOS. Relax, this is not a break actually, it's a breathing time, because I am extending the class. Okay. All right, ladies and gentlemen, boys and girls, welcome back. We are done with what? We are done with incomes which are going to be covered under IFOS. However, before taxing these incomes under section 56, section 57 says we are going to give you some deductions. See, every head of income gives us deductions. Salary gives us deduction, standard deduction, entertainment allowance, professional tax. House property gives us deduction, municipal tax, interest, standard deduction. PGBP gives us deduction. PGBP gives deduction. Bro, the entire chapter is deductions. PGBP chapter was only capital gain. Exemption nahi. First exemption is last. Transfer expense, kavva, kavvi are deductions only, no? IFOS will also give you deductions. What, sir? Let's talk about some specific cases. If you have income under family pension, so we will give you deduction. Sir, which deduction? 1/3 or 15,000, whichever is lower. And by the way, do we also know with effect from AY 25-26? In the new regime, it is 1/3 or 25,000, whichever is lower. This is actually given in 57. Everyone pay attention. This deduction is given in section 57, 57, 57, 57. But because it is directly related to this income, no? Because it is directly related to this, I actually covered it there. Actually, the deduction is given in which section? 57. Fantastic. Second, if you get interest on compensation or enhanced compensation, we will give you flat 50% deduction. We've studied this, bro. This is written in 57, but is it directly associated with this income? So we completed it there. Actually, the deductions are written where whatever deductions are there. Deductions are not in 56. Deductions are in 57. 56 is the charging section. 57 gives you deductions. Like 15 is charging section of salary. 16 gives us deductions. 22 is charging section of house property. 24 gives us deductions. 28 is charging section of PGBP. 30 to 37 gives us deductions. Correct? Eh? Third, is it possible that you have won dividend from company or mutual fund? And is that dividend a part of IFOS? Against this dividend, we will give you deduction of your expense. But which expense? Only interest expense will be allowed, no other expense. I will explain. Okay. Supposingly, I want to buy equity shares. Is it possible I take loan and invest? So I will earn dividend, but I will have to pay interest. Are you understanding the maths? Are you understanding? Earn dividend and against that pay interest. Is that interest incurred for earning your dividend or investing in shares? So allowed as a deduction. But listen, supposingly I advance my share investment to a different level. I open one office. From there, I make my share investments. I have rent, electricity. I have some staff, some manager who always tallies my investment made, dividend received on time or no. All these expenses will not be allowed. Admin expense, office expense, not allowed. The only expense allowed against dividend income will be interest. That also if loan is invested in shares. And that also maximum 20% of your income. The expense cannot be more than that. The expense can be more than that. The deduction cannot be more than 20%. The maximum deduction will be 20%. Maximum deduction will be what, bro? 20%. Is that understood? Example. Supposingly I get dividend of 1 lakh for which I have incurred expense. Interest expense of 18,000 and office expense of 7,000. So total expense of 25,000. Will I get deduction of 25? No, restricted to 20. Arey bolo. We will not get this deduction and this is within 20%. Understood? Is this problem because you all are frozen or anything, something like that? Is that freezing your mind also? Yes, sir. Mind has only frozen. The AC here is so chilled. Bro, that classroom ka ACs are not as powerful as this classroom ka ACs. You are frozen there also. You understood or no? Only interest. Arey, but the interest is only 18, then why 20? Chalo, example 2. Dividend is same, 1 lakh. Interest amount 22,000. Office expense 7,000. One thing by now you all have understood, this 7 to not allowed. 22 interest is allowed, no? So take deduction of 22. No, this will be allowed, but maximum 20,000. Understood? Only interest, maximum 20. Only interest, maximum 20. Everyone is clear on this? Next. Expenses which are similar to the following sections will be allowed as a deduction. Means, are we giving deduction against your IFOS? Expenses similar to section 30. Slap the person sitting next to you hard right now, because that person does not know section 30. Rent, rate, taxes, repairs and insurance of building. Repairs and insurance of furniture and plant and machinery. Depreciation and general deduction. Can similar expenses be incurred in IFOS also? Think about it. Think about it. Is subletting IFOS? So I will take on rent and give on rent, take on rent and give on rent. Is rent received by IFOS? So against that I will subtract the rent paid. Rent of building. Is it possible that furniture ka plant and machinery ka rent is becoming IFOS? Is it possible that I bring furniture on rent and give it on rent further? Possible hai? So that will be allowed in 31. Or is it possible that I am in business of car rental? Not business, but once in a while I do car rental. So can I say that rental will be IFOS? Against that I will take depreciation? Or forget that. This section will help you and no example will be required thereafter. If there is ever any income that you earn, are expenses for earning income allowed as a deduction? Is that a basic principle of income tax law? So we will do the same thing even in your IFOS. Think about it. Royalty, for example, was IFOS. If I want to write a book, I have to buy books of other people. Can you believe this? I have actually purchased books of my competitors. I am their client. I have paid them. Of course, with different names, different contact numbers, neighbor's wife, etc. To see, there will be, top 4-5 good authors of this subject across the country. Why is this author good? What is so good about this author? So all the good points of all the good authors should be a part of it. Will there be some purchasing? For earning this royalty, I have to pay a typist every day. New RTP comes, typist will type that in my format and give it to me. Final thing I will make, because I have to change assessment here, I have to change some answers as per amendments. I don't take it as it is, and I check if there is any typing mistake also, because when I give you the book and if there is a typing mistake, typist is not responsible, I am responsible. But for whatever bare minimum typing the typist does, I have to pay the typist. Is that my expense in my royalty income? Think about it. I hire someone for proofreading. I'll tell you that you take this, find out mistakes. Every mistake you find in my book, I will give you 100 rupees. Because that will make my book foolproof. Is that my expense? All these expenses. Just like this section says, any expense incurred for earning PGBP. Now we say any expense incurred for IFOS. What does this statement mean? Any expense that you incur for IFOS will be allowed as a deduction. Expense incurred for the purpose of earning your IFOS will be allowed as a deduction. Expense incurred for the purpose of earning your IFOS will be allowed as a deduction. Is that clear, everyone? Everyone? Hello? And last, just to let you know, with effect from AY 25-26, there is a new dim dividend that is taxable. That is 222F. No deduction will be given against your dividend under section 222F, because the cost of acquisition we are treating as capital loss. So the money received will be directly taxable, just to make it clear. Normally we say no, against dividend we allow interest etc., but against this there won't be any deduction. Ye clear hai? So we are done with list of incomes under IFOS. Now we are also done with deductions that we will get under IFOS. Income part done, deduction part also done. Section 58 is giving us certain disallowances. These are expenses which will not be allowed as a deduction. You know disallowed expenses? For example, in PGBP we have disallowed expenses from 37(2)(b) to section 43(b). For example, in capital gain we have been told that STT is not allowed under capital gain. For example, in capital gain we are told that index cost is not allowed from 23rd July. There are certain expenses which won't be allowed. What are they? Any expense that you incur for the purpose of earning casual winnings will not be allowed. Are you aware of this? If you buy lottery of 100 rupees and you win lottery of 1000 rupees, you pay tax on 100, no deduction. Where is it written? 58. But because it was related to casual winnings, we studied the point under casual winnings. Are you understanding this? Any expense incurred for the purpose of earning casual winnings not allowed as a deduction. And then further, expenses which are similar to the following sections. See if you remember them. Section 40 small a. TDS not deducted. Just like in PGBP you have to deduct TDS. Here also if you are paying rent to someone, you will have to deduct TDS. If you don't deduct TDS, resident pay 30%, non-resident pay 100%. There was a section 40A subsection 2, excessive payment to relatives. There was a section 40A subsection 3, cash expenditure more than 10,000 for transporter more than 35,000. There was a section 43B, certain expenses will be allowed but only and only if you make payment up to the due date of return filing. For example, or indirect taxes, payment for usage of railway assets. These expenses will be allowed only and only if paid till the due date. Only if paid till the due date. Correct or no? These are disallowances which are going to be a part of your IFOS. Means, can I say whatever is disallowed in PGBP will also be disallowed under IFOS? Now I want to have a very, very important discussion with you. Please pay attention, everyone. Somewhere during the discussion of the chapter, we had a small discussion, sir. If I am giving assets on rent regularly, so it will be PGBP. And if I do it sometimes, it will be IFOS. Open land, for example, PGBP or IFOS. There is confusion. Sir, what do you mean by frequently, regularly? Sir, there was a question where if there is composite rent and I can separate them, then I will put house rent under house, but other assets under PGBP or IFOS. Regularly, then PGBP, not regularly, then IFOS. So big question arises. Even in royalty, some people counter argue, sir. See, understandable that in your royalty you are not daily involved, but in creation of the asset you were involved. Shouldn't it be PGBP? IFOS and PGBP, if you compare the two heads mentally, you will realize that there is lot of confusion of classification. Salary is crystal clear. Employer-employee relationship. So is house property, building owner not doing business, and capital gain, capital asset taxable. But PGBP is basically talking about sale of goods and services. If I do it as a daily activity, regular activity, then I put it under PGBP. Otherwise, I put it under IFOS. So the question, the controversy, the problem is how to distinguish. And the answer to which is, listen, if you are ever confused, probably later write it down also, it will be useful for you. If you are ever confused between PGBP and IFOS, don't waste time, write it wherever you want. Don't waste time, write it wherever you want. It won't make any difference except classification. I'll prove it to you. Oh, writers. Well, a reason to understand. My royalty income, I write in PGBP or I write in IFOS. My total income will remain same. Why, sir? PGBP gives deduction of actual expenses. IFOS also gives deduction of actual expenses. Salary gives standard deduction. Rent gives standard deduction. Capital gain sometimes gives cost, sometimes index cost. But the computation rules of PGBP and IFOS are same. Both give deduction of actual expenses. So if the amount taxable in PGBP is X, then the amount taxable under IFOS will also be the same amount, because the calculation of PGBP and IFOS is same. That means if I put under PGBP randomly without wasting time in thinking, or I put under IFOS, my entity I will remain same. And my tax will also remain same, because supposingly betting and gambling also. I told you put under IFOS. Supposingly you put under PGBP. Still you won't get deduction of expenses, etc. So entity amount will remain same. And tax calculation, do you have to separate them? So whether you write in PGBP or you write in IFOS, separation has to be done. So if it is normal income, it will remain normal income. If it is special income, it will remain special income. The amount of income and the amount of tax cannot change in your classification between PGBP and IFOS, because the rules of calculation of PGBP and IFOS are same. Actual income minus actual expenses. And thus I repeat the statement. If you are ever confused between PGBP and IFOS, write it wherever you want without wasting time. The answer remains same. Don't waste time. If you are confused and you have this confusion, sir, you say regularly given on rent, then it is PGBP. Sometimes given, then it is IFOS. Sir, what do you mean by regular? Sometimes, sir, I don't understand. Don't understand? No problem. Write it wherever. Answer remains same. Answer remains same. Is a very, very important takeaway here. Very, very important takeaway. Everyone is clear on this. Mitro, everyone absolutely clear on this. Well then, ladies and gentlemen, boys and girls, Devyo, Sajjano, Mitro, we reach that stage of the chapter where IFOS is 50% complete. And there is only one concept now left to be taught in the chapter IFOS, that is the concept of gift. Half of IFOS is IFOS, the other half is gift. If you observe this list, you observe every income I discussed in detail, whether it was the statement in online games or whether it is tax treatment of interest on compensation, family pension, every income I have discussed in detail. If there is only one income, see, dividend we used so much time. If there is only one income which I did not discuss at all, I just wrote and complete, is gift, because gift in itself is a separate heading which requires separate discussion altogether. Is that clear? So tomorrow's class starts with a heading, gift, and the gift part of IFOS is going to be discussed in detail. Are we clear on this? All right, ladies and gentlemen, that is your first part of IFOS and today's lecture. Thank you very much.